leading the gains purely by dint of the weight that it has on the benchmark. And you have HDFC Bank on the other side of the spectrum, which is losing ground. Not by a very large margin, remember, but it is proving to be a bit of a drag. Larsen & Toubro, TCS and Infi are the other gainers. Bharti Airtel losing ground as well as ICICI Bank, and I told you that the financials are not doing particularly well in trade today. Overall, the market breadth as a whole is tilted in favor of the advances, and quite the opposite picture from what you saw yesterday. Of course, yesterday it was even more stark in favor of the declines. But let's talk about the stock in focus, and it is in fact Brigade Enterprises. This is on the back of earnings, and the stock is doing particularly well in trade. Of course, here too, it is off the high point of the day, but all the same, it's trading with gains of over 5%. We've got Anushi joining in to set us up with what the latest development is. Anushi, the numbers stood out as quite positive, right?
Right. So now if you have to look at Brigade Enterprises numbers for Q1, quite a set of decent numbers that we are looking at. The revenue saw about a 65% jump to 1,078 crore, while the EBITDA also in line with the revenue growth saw about a 67% of a jump. So both of these metrics are above the Bloomberg estimates of 1,031 crore and 273 crore respectively. Margins also moved inched upwards to 27% as compared to 26.8%, and net profit, though it recorded about a 3.6x jump to 80.5 crore, this was still below the expectations of 97 crore. But this was on the financial metrics part. But even if you look at some of the other key metrics, which is the pre-sales, or rather the sales booked for projects under construction, the pre-sales saw about a 9% growth at 1,086 crore, while the pre-sales volume rose to about 1.15 million square feet as compared to 1.46 million square feet. Now, taking this into consideration, the average realization for the same stood at about 9,483 per square feet. But over here also, if you look at the segmental wise performance, again, the growth that we are seeing is led by the realty segment, seeing about a 105% growth, followed by leasing revenue, which saw about a 23% growth, and hospitality revenue clocking in a 11% growth. But on the other key developments for the company also that we should be watching out forward, the company has also signed an agreement for new office space in Bangalore. From year in, they expect to see a lease income of up to rupees 100 crore per year, and they'll be investing 750 crore for the same. So while Brigade is in focus today, if you look at its stock performance over different periods, it's in the last 1 week and 1 month, it has seen some weakness, 6% of a downtick, while in 1 month it has seen about a 9% of downtick. And if you take the 6 months concentration, the stock has seen about 12% gains. So this is all that we are gathering on Brigade Enterprises as of today.
All right, Anushi, thanks so much for getting us those details. Of course, there is something else that is also buzzing in the real estate space. Whether or not this is true is another matter. There could in fact be a review of the LTCG on real estate. No confirmation, remember, of that, but the realty index as a whole has been in focus all morning. Asta Jain of Hem Securities, as well as Swati Hotkar joining in this morning to answer all of your questions. Thanks to the both of you for taking the time. Pleasure as always having you on the program. Asta, I'll come to you first on Brigade Enterprises. What did you make of the earnings, and what's your view on the stock?
Hi, good afternoon to both of you. Yes, talking about this counter, definitely the price momentum today is a reflection of the earnings and the strength in the earnings which this company has posted. So on the back of, we know that there's a strong growth in their sales, because 65% of their basic business is only real estate, followed by lease rentals and then hospitality. So if I talk about this business of real estate, they have shown strong growth. Now, on the basis of the robust booking, their launch pipeline is very strong. So I think in future also we will continue to see strong momentum in their earnings from this counter, and hence we are positive on this counter. There is only one concerning thing about this is the premium valuations which it is quoting right now. So that is the only reason that we have not seen this stock performing so strongly in past few days. But now, after this earnings, definitely the stock has gained momentum. So our idea here is to stay invested in the counter with an initial price target of about 1,300, but that too in the medium to long term, because right now premium valuations are already there in this counter. So it is a medium to long term buy call from our side for the possible target of 1,300.
1,300. All right. The stock is very close to that 1200 mark, so not a tremendous upside from this point. Let's jump into the queries, and just a quick reminder, you see that number at the bottom of your screen. If you're sending us a question for the first time, do tell us your name and your location. It'll help you identify when we take up your question. The first one we're taking today is from Sahil, and he's asking about a company in the automotive ancillary space. He's talking about Motherson Wiring. And this is an interesting stock, of course. It's currently trading higher by 0.4% at about 70 rupees. The question is for the long-term prospects, though, and for the next 2 years. Asta, would you have a buy call on this?
So for next 2 years, right now, I think one can just wait for some more decline to come and then make a entry into this counter, because long-term prospects are very strong. But right now, the kind of market conditions we are looking, I think some decline can come in case if markets will not behave in the manner in which they are behaving right now. I mean, if they decline more from here. So talking about this counter, I think they have the diverse range of wire harnesses, and in fact, their technology is very strong. So I think going ahead, definitely this company will prove its mettle in their financial performance. But market conditions are like that only. That's why I'm recommending buying on dip strategy, not right now, maybe at the fall of around 65. The stock is a better buy option with a price target of 80 to 85.
Okay, not a considerable upside based on the fundamentals. I'm coming to you for the next one, Swati, and this one is Z Entertainment. We've got Salim from Andhra Pradesh, who's holding Z, 4,000 shares, bought at levels of 177, which is elevated levels, and the stock is currently trading at 136 or thereabouts. Would you suggest holding on, or would you book a loss? He's asking when can he recover his buy price, if at all?
Good morning, both of you. Definitely the view on particular Z media is a little bit cautious. Why I'm saying that? Because from the year of 2020 itself, we are continuously facing a selling pressure. The stock is trading nearby its low level. We are witnessing a double bottom nearby 114, 120 levels. So downfall as of now, it's very restricted. Downside it can come down up to 120 to 115 levels. So I will not suggest to sell or to book the losses at the current market price, because the risk reward ratio is favorable at the current level to average it out. So if you are getting any dips towards 215 level, you can buy or average this particular counter. I believe we might see some turnaround after forming some sort of a bottom nearby 115 level, and we might see some pullback rally towards at least 240 to 230 levels on the higher side. So at the current level, I will suggest to hold on, not to book the losses.
Okay, we've got Rohan Sharma who's got the next question. REC took a bit of a battering in trade yesterday. He's bought at levels of 587. And one of the concerns, I think, has been the unwinding of the yen carry trade and how it relates to the access to capital. Swati, or rather, Asta, I'm not sure how this affects the fundamentals, because a lot's been said about the lending in this space, in the electrification space. Would you say that you should hold on? It's more or less at the market price from what I can see.
Yes, so I think hold is a better option at present moment of a time, because I don't want that the investor should make any sort of losses by exiting route right now. So talking about this counter, yes, Rural Electrification Corporation, as we all know, it is into that only the funding, etc. of railways, and we think that definitely some numbers can be muted going forward, but in the long term, the kind of demand is there. I think it will not going to affect the financials of the company, and in the short term, maybe the coming quarter can be a muted set of number, but going ahead in the long term, we can see again strength in the counter. So my idea here is to stay invested in the counter. Initial price target which I can attribute to this counter is 620 to 630. Right now I'm giving short targets because we are really cautious about the market, so I'm not giving any big targets to any of the queries today. But I think 620, 630 can be attributed to this counter.
Okay, that's a fair point, and thanks for that clarification. We've got Jammu and Kashmir Bank to talk about next, and we've got Khurshid who's tuning in from Srinagar in Kashmir, and he's bought 20,000 shares at a price of 76 rupees, so he's in the green right now. The stock is up as much as 2.8% in trade today. The question is, what are the long-term prospects? And he's defined this as 2 years, Asta. On the fundamentals, would you hold on?
Yes, for sure. JNK Bank is looking strong in the long term because here the time horizon is 2 years, so no need to worry. The only thing which we have to see right now how the deposit mobilization is being done, and for that how the deposits are coming into the bank because that is the key concern for all the banks across the board. So we really need to see that for the coming 2 quarters. We really need to see how the deposit situation is. But again, if I talk about the other parameters, I think their asset quality is okay. It is into the fine shape and we can see some sort of increase in the margins also going ahead. So from the long term perspective, it is a hold from our side. Initial price target again, which I am attributing right now to this counter is around 135 to 140.
Okay, Gale is the next counter that we're looking at, and I'm just pulling up the charts as we speak. It is up as much as 38%, 38.5% for the year to date 2024. We've got Ramesh Walia from Chandigarh, who's bought at levels of 220. The stock is currently trading at 229, not too far away from the buy price. The question is, for the next 1 year, what are the prospects? What are the key levels to look at? And Swati, what is your advice on this particular stock?
See, Alex, the counter is really doing very well from the 2023 tweet. Check out the rally from almost the stock has given a breakout for 120 and non-stop it has rallied up to 240 levels. So at the current level, profit bookings cannot be denied, but probably the profit booking can be, we will be seeing at around up to 200 levels. And again, we will see some bounce back rally. The overall technical setup is really positive. We are not showing any, the charts doesn't show any sign of a reversal from the higher assets as long as it's just trading in the upward rising channel. So at the current level, he can definitely hold on the long positions. I believe 210 is the immediate support level. So as long as the particular counter holds that level, definitely one can go for a long position or hold its long position for immediate target of 270 to 280 levels on the high side.
All right, let's pull up Adani Green and see where it's currently trading. And this is a question from Uttar Pradesh, and Utkarsh Singh is asking about it. It's currently trading at just under 1800. And we've got Utkarsh, who's bought at significantly elevated levels. What's a view on the charts though, Swati? If you have bought at elevated levels and if you have the patience, would you hold on to this?
Alex, as of now, the stock is in the formation of a cup and handle pattern, which is being formed in the monthly charts as such. Now it is in the under the formations of the handle pattern. So we are getting very sideways momentum in the last few 3 to 4 month session. It's got stuck within the range of a 1700 to 1900 on the in between 200 points. It is consolidating. A breakout on either side will decide the clear trend of this particular counter. I will suggest to hold on because as long as 1700 levels are intact on the closing basis, I believe we might witness some more rally. Initial targets will be 1900. About at levels, definitely a swift rally can be seen towards to 2400 or so. So if you're looking for a longer term horizon or a little bit a shorter term horizon, definitely you can hold on this particular counter.
Yeah, just a clarification, Swati, because I was not sure of the buy price. He's bought at all-time highs or very close to all-time highs. He says his buy price was 2800. So with that information, would you still hold on?
Yes, definitely I will hold on because 1700 is acting as a very crucial support level. So till the time he has kept the long position, I will suggest to wait for more times. We might witness some turnaround in this particular counter. So take more 70-80 points risk and hold your long positions and wait for the turnaround levels.
Yeah. All right. Just a standard disclaimer. This is NDTV Profit, part of the NDTV Group, which is owned by the Adani Group. We have to slip into a very quick break. We'll take more of your questions on the other side, so do stay tuned.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
and the whole day passes like a blur. The news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
All right, welcome back. You're watching NDTV Profit and this is Ask Profit. The next question we're taking is from Praveen Kumar. He's writing in from Vellore in Tamil Nadu and he's asking about a couple of counters, BPCL and HPCL. He's bought significant quantity of both of these Asta. He's invested as much as 9 lakh rupees in mid-June and he's already making profits, he says, of about 10% in each of those. He's got 1,598 shares of BPCL and 1,357 shares of HPCL. He's willing to hold for the very long term, though he hasn't described what that is. He hasn't specified. What are the fundamentals that you would focus on and should you hold on? He's asking specifically whether he should be worried about Middle East tensions.
I think, but the way crude is moving right now, prices are still not reflecting that sort of concern. But talking about these two particular counter, what is surprising and what is positive about these two counters in their quarterly result was their underlying margins, and both of them has shown strong refining margins. So that is the major positive for these two counters. I think one can remain invested in these two counters, and if anyone wants to go any particular between these two, then we would like to go with BPCL, and the price target for the same initially at the initial level is at around 380 to 385 level. So both counters are looking good, but BPCL is our first choice with the initial price target of 385.
All right, NFL is the next, National Fertilizers, I should specify, is the next counter that we're talking about. It's currently trading at 134, and we've got Abhishek Mehta who's writing in from Pune and who has bought the price at levels of 152. He's holding 1,200 shares. He's asking when can he recover his buy price and can he make money on it? Swati, what are the kind of levels that you would look at and what are the charts indicating?
See, the chart's little bit cautious because in the month of the mid of July, we have witnessed a negative divergence on this particular counter. And that's why we are witnessing a selling pressure from almost 160 to levels to 134, 135. Now, it has at the current level, it has a very cluster support nearby 125. So as long as 125 support levels hold, we might witness some pullback rally back towards to 153, 154. He might again regain its buying price, but yes, profit can be witnessed only if the stock manages to give a breakout of a 160. Then only we can witness new uptrend, or say the fresh buying sessions can be seen above 160 towards 280 level. My view is a little bit cautious. Try to exit whenever we witness some sort of a pullback rally towards to 160 levels.
All right. Interesting question because we've seen considerable action in the primary markets and First Cry is a company that has its IPO that opened today. As I am told, the latest update is that it is subscribed by about 3%. The company's already raised a considerable sum from anchor investors. Asta, have you looked at the prospectus and what's your view? What's your call on this IPO?
Yes, we have came out with a report on this. So we are giving a subscribe rating to this IPO, but for the long-term purpose, because in the short term, we cannot predict the market's mood. As we have seen the yesterday fall, it was a big fall. Now, talking about this counter, it is one of the largest multi-channel retail company, and with a focus on the kids, mothers, especially, we can say young children. So they are focused on that. Talking about this counter, the major negative which seems prima facie to be about this company is their loss-making nature, because in the financials they have shown losses, but there are reasons to that, because they were into the expansion mode. They have opened various stores. So definitely, the cost which the company has incurred due to those reasons, we have seen the losses. But going ahead, we are believing that this company will be turned around by the FY27. So within the time frame of 2 years, we can see the profits on the company. We are positive on this counter because one major positive about the company is about their addressable market also. The size is huge. It is $48 to $50 billion first price addressable market. So they have a huge opportunity to grow. They have a strong brand. So we are recommending subscribe to this, keeping into mind long term. However, if markets move in the favor, then definitely some listing gain can also be seen on this counter on the listing day.
All right. And depending on the subscription, of course, you will get allocation. Let's see how that pans out. But from the secondary markets, again, this is a question for you, Swati, on Ujjivan Small Finance Bank. We've got Srinivas from Hyderabad who's bought at levels of 55 and he's wondering what the long-term prospects are. He's defined that as 2 years. But what would your advice be based on how it's doing on the charts?
See, the charts as of now witnessing that this particular stock is just trading nearby its support levels, which comes to at around 40 to 42 levels. That is the cluster level we have seen since 2023. Now, at the current level, the stock is also trading nearby its oversold zones, which indicates that the selling pressure might not get intensified here soon, but definitely pullback rally can be seen in the short-term period of time. So as long as 42 levels are respected, definitely pullback rally can be seen up to 50 to 54 levels on the high side. If he's holding for a longer term duration, definitely he can hold on by maintaining a strict stop loss of 41 rupees on the downside. And if you're getting a breakout of a 50 levels, then 55 to 58 levels can be seen.
All right, Satya has got this next question. HCC and Suzlon. He's wondering whether to get into these two counters from the perspective of the next 1 to 2 years. Swati, I'm coming back to you on this one because it is a question about a fresh entry into these two counters. Suzlon particularly has done incredibly well. What a story. But would you get into it at the current juncture?
Alex, looking towards the chart, I will not suggest to enter it at the current level. The current stock is trading at the level of 68. We have seen a very good rally in this particular counter. No wonder we might witness some sort of a correction or say the profit booking at the current market price. Any dips towards 250 level, definitely one can take a long positions into Suzlon, but not at the current market price because the risk reward ratio is not favorable at the current moment period of time. Coming towards the HCC, definitely this counter is also really doing very well compared to the Suzlon, but we need to wait for a sort of a correction or say where it will test the support levels of around 40 levels. So if you're looking for any fresh long positions, wait for in this particular counter, both the counters, HCC one can go for a long if it's tested 40 levels and just respect that level at least for a 1 to 2 days closing basis, then one can go for a long positions, but not at the current market price.
All right. One quick more question that we can take. IRFC is the name of the counter. And this is a question from Vardarajan. He's writing in from Chennai. He's bought at levels of 195.6 and he's got 20. I think the number of shares is wrong. He's got 34 shares and he's saying that he can hold for the long term. What's the view on the fundamentals, Asta?
So I think it is the sole borrowing arm of the Indian Railways. And I think the fundamentals are solid for this company. We are expecting their margins to get increased going ahead also. We are like positive on this counter, recommending a buy as well as hold. Initial price target 195 to 190 it can be set on this counter.
Okay, fair point. All right. Unfortunately, we're completely out of time and I've tried to reply to everybody here, but those people that I haven't been able to speak to, unfortunately, we couldn't take your question today. But hopefully the answers that Asta and Swati have discussed today, or the stocks that they've discussed, have benefited you nonetheless. That brings us to the end of this conversation. Swati as well as Asa, thanks so much as always for taking the time. And viewers, we'll be back tomorrow to take more of your questions. In the meanwhile, do stay tuned. Lots more coming up on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple.
If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
Hello and welcome. This is Hot Money. I'm Agam Vakil, and in this show we take you through all the stocks which are buzzing or have been the flavor of the season. A quick look at how markets are faring. We've seen a little bit of temperance, a little bit of moderation when it comes to key benchmark indices, which are off days highs, but they've come off days lows as well. So it seems like a range-bound session now. At the moment, it's also the Fin Nifty expiry, a lot of banking stocks in focus. The Fin Nifty at one point in time, or actually it is still red, marginally in the red right now. It's actually flat, as you can see, not too much change there. And the banking index is looking at a little bit of reversion to mean, considering we're not looking at too much traction there either. It's only the Nifty which stands out, and that's up around 0.7% right now. All in all, a fairly mixed day of trade if you consider the broader markets too. Let's talk about the constituents of the Nifty to see where there's a pull and push when it comes to this specific index, where the heavyweights are panning out, and in terms of that, of course, Reliance Industries, L&T and TCS, which were heavily under pressure yesterday, are looking at a tad bit of recovery for now. Bharti Airtel, HDFC Life and SBI Life, on the other hand, weighing down in the indices to a certain extent, but it's a green day for the Nifty 50 specifically. Let's talk about the broader markets too. A little bit of an outperformance returning to the mid-cap and the small-cap indices. The mid-cap index is up around 1.2%. The small-cap index is up around 1.4%. Even in terms of the broader market gainers, well, we do have advances in a handful of names out there, which would include something like perhaps Godrej Properties, which is up around 3.8%. UPL up and about, that's up 3%. Gujarat Gas advancing, GMR Airports, Indus Tower, Concor, all of them up and about in trade. We also have something like a Brigade, which is advancing on the back of good earnings coming through. So these are just some of the names that we have as far as your advances are concerned. Not too much to speak for when it comes to losers. But, let's put the spotlight on Morpin Laboratories now. We have Sushil Suri is the chairman and managing director of Morpin Labs, and we understand that QIP is under the way. And to guide us through this conversation, I also have with me Varsha, who's going to perhaps take us through and lead this conversation here. Varsha, it's over to you.
Well, thanks Agam for that. So yes, company has actually raised 200 crore through QIP, and marquee investors have participated in this QIP. And well, to talk about that, we have Mr. Sushil Suri, who is the chairman and managing director of the company. Welcome, Mr. Sushil.
Thank you very much.
Well, I just wanted to know about the whole QIP, why you have raised rupees 200 crore, where you're going to spend this money into?
Yeah, Varsha, first of all, I would, through your platform, I would like to thank all the investors, all the stakeholders, and more particularly the institutional investors who have gracefully participated in this long-awaited capital raise. So we had only 4% institutional placements, institutional holdings in our company, and now that have gone to more than 10%. So that's a big, I would say, grateful moment for the company to thank all the institutional investors who have put their faith in the company. So we had an overwhelming response, and against our 200 crore offering, we had got 335 crore rupees, so which is almost 1.68 times of the offering. So at the last minute, we had to take a call that, okay, should we take more money? But internally, we could see that 200 crore is what we all need for the immediate growth plans. And coming specifically to the point that, okay, why we are in the QIP and what do we need, where do we go with the money? So Varsha, we had been growing at a very aggressive rate last couple of years, and the company as a whole, we have been growing at a CAGR of 17-18%, as against the industry average of between 10 to 12%. We have extra growth, and within the pharmaceutical space, we have API business which was growing at 17-18%, but our medical devices business have been overshooting, and we had got 27 to 28% CAGR. Year after year. So we could see that, okay, now we have a growth plan, and India is booming as a manufacturing hub. So we could see that, okay, there is an opportunity for India to consolidate and create a position. We hadn't had a capital event for the longest time, and all the growth we were doing was from the internal accruals. And we are a debt-free company, so we never had any big investment even in the capex also and the working capital also. So now to capitalize on what the market opportunity is, so we approach the market and particularly the institutional investors that we need to think and plan for the long term. And for long-term investor, we needed institutional investors to support us. Naturally, we presented our case. So here we are that all the big boys, all the, I would say, big names, whether it is Citi, Nomura or Bank of America, Morgan Stanley, everybody is now there on our cap table. So we certainly had around 3.5-4%, including domestic institutions. Now Society General, Samsung India, Citi, all these people have participated. So this gives a good, I would say, both responsibility also and impetus also to the company, that we have all these people who will support us and I would say monitor us also, and we are happy to have these people on the table. And I would like to say through your platform again, right, to welcome all the new investors on the board of Morpin, so that we can go together and create a better future. So coming specifically to the businesses, as I told, that API business had been growing very smoothly, 17 to 18% CAGR, a compounded annual growth rate. There, Varsha, we have got 7-8 products where we are the market leader. 6 products are there, we are number 1 to number 3, 4. 3 products we are number 1. loratadine, desloratadine, montelukast. We are the market leaders globally in terms of the capacities. And now what we see is that another 3 products where we are number 3rd or 4th, there also we can be 2nd or 1st if we try to do that. Atorvastatin, fexofenadine and rosuvastatin. So what we are trying to do is build more capacities for the products what we already have so that we can gather the more leadership position. And more importantly, Varsha, is that we try to do more of new molecules. So API is all about new molecules and research and having processes and patents which are unique. So we are now trying to make a strategy, or rather I would say formulated a strategy that we need to expand our capacities. We have a limited capacity, only 400 kiloliters, and that capacity is being added to 600 kiloliters from 400 KL to 600 KL. And this will give us an enhanced presence in the market in terms of our delivery, addressing to the customers. We are exporting to 80 countries already, and there is a phenomenal rate of growth in almost all the continents, whether it is US or Europe or Middle East or Asian countries. We have been growing consistently over all the countries. So now what we want to do is to cater to all the growing needs. We need to build more capacities. Very simple thing. We have to do more of what we are already doing. So second,
Please go ahead.
Yes. So here, Varsha, our capex requirement for the API division is 75 crores. And out of the 200 crores after expenses, we get 187 crores. 75 crore goes to capex of the API division. And then the second division, which has been giving, I would say, phenomenal and interesting growth, is medical devices, as I shared with you. So there we have 2 lead products, I would say, glucometer and BP monitors. We are market leaders in both BP monitor and gluco monitors, and in both the cases we hold good presence in the market in terms of shares and the growth also. So glucometers, we have around 1.2 crore meters already installed in the market, and which becomes our customer base. And of course we keep on supplying strips year after year. So it all depends how much market base we have, how much customer base we have. So around 11-12 million customer base we have got, which is, I would say, feeding our regular sales. So we are increasing the capacity of glucometers. So we have end-to-end backward integration in glucometers. We manufacture it from bare chips. So we have our own SMT machines, we have assembly lines, we have injection molding machines. So we are fully integrated in the medical devices, and now we are adding more machines so that we can supply more and more medical devices to the whole world, and India being the hub of the world. So once we build larger capacities, we want to make our space for the global capacities also.
Well, Mr. Suri, I understand that, but one question that I had was, I don't want any kind of guidance to this, but the company has achieved a CAGR growth of around 16 to 17%, as you rightly said. Now, looking at the long-term perspective, not the shorter term, do you believe that company can achieve growth rates exceeding this number, considering the QIP that you have been doing?
Look, as you said, that I'm not saying that it's a guidance, but I would say that is an effort, and that is a whole pretext what we are working upon, that if we have to continue on this growth, so it was not possible without additional capital. So that is where we need to have a capital raise, that is where we need to have, I would say, more new product portfolio, new markets, and of course more control. And I would say, depending on the way India is having an opportunity, so we are at the opportune time. Of course, we all know that China is disturbed, and of course we do have impact of the Chinese raw material supply. The prices are up and down, but we are, as a Morpen, we are seeing a lot of opportunities, and we are hopeful that we will be able to maintain this ratio. Whether it is 15 or 16 or 17, these exact numbers actually no one can predict, but we see a lot of opportunities.
Also, who would be your large and branded players in this medical devices space, and also a lot of EMS companies are coming into this space. So how do you see competition as a whole for your company?
Varsha, basically this line is very technical, so I will not count these EMS companies to be part of this, because this line needs a lot of trust. This is not just a device. So as Morpen, as Dr. Morpen is a brand, we have established this Dr. Morpen brand since last 24 years now. So people believe on us, people rely on our service, and it's all service oriented thing. It's not like you just pick up any fixed thing from a toy store and okay, that's it. But what we do is a lifetime free replacement of the meters. We have service centers all over the country. So, and of course, we go through pharmaceutical trade, we go through distributors, pharmacies and all that. So EMS companies are not my competition. But coming specifically to the pharma competition, the one big company is an international company, and you might be knowing it's Roche, who has been neck to neck, and they are there since last 30-40 years. So I won't say that they are big or I'm small, but they are there in the market. But of late, we have been able to surpass the number of meters supplied and number of strips supplied in the market. And of course, we are gaining share day by day. So I don't have any official numbers that what's the market data, but our share is between 20 to 21%. And I'm assuming an equivalent share with them. So rest all is a long tail. This long tail is what has been typically available during seasonal time. During COVID time, many companies had come and many companies have folded after that. And one of our companies in our Parvanu, Baddi neighborhood, they came during COVID, they folded within 1 year. So I would say though that's a long tail. I don't see that as a competition. But as Morpen, we have been able to build a very beautiful model wherein not many companies are there, unlike a typical pharma where we have 50, 60, 100 brands of one particular thing. Here we have one or two brands. Of course, we are in a competitive market. But India is the diabetic capital of the world. And of course, so is the largest number of cardiac patients in the world. So we see a lot of opportunity in this market, and it's a niche market and it's early days, I would say. But the growth potential would be much higher. So that is where I say that this has been growing at a CAGR of 27-28%. So I think that's an interesting thing. If we, in today's age, we get some business which grows at 37-38%. Last year, medical devices grew 35%. So of course, it's a smaller base of previous years. But we are comfortable and confident on this part.
Okay, Mr. Suri, so we leave it at that. Thank you so much for joining us, and well, all the best for your future plans with respect to the company. Of course, as far as our viewers are concerned, we'll continue to give you an update on this one. Also thanking my colleague Vasha for joining us and guiding us through that conversation. But with that, it's time for a short break, and we will be back with a lot more in terms of stocks. Well, back in just a bit. Stay tuned in.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome back to Hot Money, and we are now taking stock of all the companies which will be in focus at the moment. When we're talking about Brigade Enterprises, the kind of stellar earnings that they've come up with, we're also going to address Bharti Airtel. ONGC, and of course, if we have time, we will talk about Tata Chemicals as well. And to take us through these themes, well, we are now in conversation with Raghvendra Kedia. He's the founder of Prosperity Advisors. Raghvendra, good afternoon. Thank you so much for joining in. Let me just introduce the first topic to us by getting my colleague Anushi into the picture, who is going to tell us about Brigade Enterprises and how the quarter's been. Anushi, over to you.
Right, so now if you have to look at Brigade Enterprises numbers for Q1, quite a set of decent numbers that we are looking at. The revenue saw about a 65% jump to 1,078 crore, while the EBITDA also in line with the revenue growth saw about a 67% of a jump. So both of these metrics are above the Bloomberg estimates of 1,031 crore and 273 crore respectively. Margins also moved inched upwards to 27% as compared to 26.8%, and net profit, though it recorded about a 3.6x jump to 80.5 crore, this was still below the expectations of 97 crore. But this was on the financial metrics part. But even if you look at some of the other key metrics, which is the pre-sales, or rather the sales booked for projects under construction, the pre-sales saw about a 9% growth at 1,086 crore, while the pre-sales volume rose to about 1.15 million square feet as compared to 1.46 million square feet. Now, taking this into consideration, the average realization for the same stood at about 9,483 per square feet. But over here also, if you look at the segmental wise performance, again, the growth that we are seeing is led by the realty segment, seeing about a 105% growth, followed by leasing revenue, which saw about a 23% growth, and hospitality revenue clocking in a 11% growth. But on the other key developments for the company also that we should be watching out forward, the company has also signed an agreement for new office space in Bangalore. From year in, they expect to see a lease income of up to rupees 100 crore per year, and they'll be investing 750 crore for the same. So while Brigade is in focus today, if you look at its stock performance over different periods, it's in the last 1 week and 1 month, it has seen some weakness, 6% of a downtick, while in 1 month it has seen about a 9% of downtick. And if you take the 6 months concentration, the stock has seen about 12% gains. So this is all that we are gathering on Brigade Enterprises as of today.
Okay, Anushi, thank you so much for getting us that update on Brigade Enterprises. Raghvendra, your view on Brigade, how are you looking at things here?
Agam, broadly the numbers have been beating the overall estimates. However, when we look at Brigade on a valuation metrics, we see that the full year EPS comes at around 18 rupees, the earning per share. And that gives the company at current price of 1190 a P multiple of 60-63, which is extremely expensive if you compare it with the entire real estate space, specifically with their immediate peers like an Oberoi Realty or a Prestige Assets. On valuation metrics, this company seems to be expensive. Even the ROE at current stellar numbers looks at to be around 8% to 9% on a full year basis. So the return on equity is also in single digit, which makes the valuation at 60 times P multiple very expensive. So we would actually take this uptick as a selling opportunity and book our profits in case if you're holding the stock. If someone is not holding, then the better entry level would be somewhere around 1050, 1050. On valuation metrics, the company is expensive. So it could be sold and looked at as a booking profit at current levels of 1190 on Brigade Enterprises.
All right. That's Brigade, and we move on to taking stock of how Bharti Airtel has panned out. And for that, we now have Rucha joining us. Rucha, over to you.
For brokerages, I'll just give highlights of the results. Positive on India operations, revenue was up about 2%. Net profit was up 7%, whereas wireless revenue was up about 2%. The other highlight is that ARPU was flat, around like 2 rupees up, around 211 versus 209 in the previous quarter. Now coming to brokerages, Citi is the most bullish one with around 19% of upside and a target price of 1750. Now it said that India capex shows sign of moderation according to the management commentary in the past quarter, and this is what drove the free cash flow higher along with deleveraging. Now this is when the brokerage house expects that shareholders could get dividend and buybacks from Airtel. Also talking about JP Morgan has a moderate upside of around 2%, but it was surprised positively on the India capex stability and acceleration in the free cash flow. Now revenue growth was strong in the homes segment, and And Bharti Airtel also announced deferring of calling the partly paid up shares due to strong free cash flow and generated by lower capex and deleveraging. Now, according to CLSA is also bullish on Bharti Airtel with upside of about 5%. The consolidated numbers were largely dragged because of African business, because of deleveraging, because of devaluation of the currency. Board also feels that there is no immediate funding requirement, is what CLSA has to say on the stock.
Right, Raghavendra, come in on Bharti Airtel as well. We've had the earnings come through. They've also taken price hikes, potential price hikes in the order over the next 12 months as well. Your view here?
So Bharti Airtel, the numbers broadly were in line, but few concerns we come across with post these earnings are the revenue per user, the ARPU has been flat. Even the revenue growth at a consolidated basis is just around 2.8%. So pretty much not impressive on the revenue growth as well. Standalone basis, the India business is doing well in terms of the capex, in terms of the overall revenue and profitability. But on a consolidated basis, where the African business also kicks in, the overall company of Bharti Airtel looks like a pretty much steady in terms of the growth potential. So at current levels of 1450, we would not actually enter the stock, wait for a steep correction, considering the P multiples are also north of 70. And there is stiff competition from the existing large cap players across Indian geography, which is where they have done well. So considering the heavy competition and flat revenues on a console basis, we would actually not get into a fresh entry at Bharti Airtel, wait and watch for another 2 levels and see if the African business kicks in. Until then, wait and watch at levels of 1440.
Okay, there you have it. That's your view on Bharti Airtel. We also had ONGC announce its earnings, and let's take a look at how they have in fact come through. We now have Mihika who's joining us to give us an update on that one. Mihika, over to you.
Yes, Agam. It was a weak set of numbers, but this was expected by the market. Revenues were flat at 1.66 lakh crores. EBITDA did come down 6% on a quarter-on-quarter basis, and net profits were down almost over 11% at 10,235 crores. But this was in line with expectations. One of the main reasons why the weak performance did come in was due to lower production. Crude oil production was down 1.4% on a year-on-year basis, and gas production, which is key, was down 4.1% on a year-on-year basis. When we talk about net realizations for the crude oil segment, the crude oil via nominated blocks, the realizations were up 8.8% on a year-on-year basis. Even the crude oil produced via joint ventures, the realizations for those were up 14.2%. But the main weakness did come through with the gas realizations, which were down 3.1% on a year-on-year basis at 6.5 per million metric British thermal unit, which is mandated by the government itself.
All right, Mika, thank you so much for that update on ONGC. Raghavendra, we've seen gains in ONGC, but that's largely on account of the way crude has panned out. What's the way forward here?
So the earnings, if you see Agam, as Mika mentioned, they have been pretty much in line. What we like about ONGC has been the steady set of earnings. On a quarter-on-quarter basis, their earnings largely fall around 8 rupee on an EPS basis. So that gives you a full year EPS of around 32 to 35. And if crude goes up, we would consider that at 35 levels. And if you give a moderate multiple of 11 times, we get a price target of around 380, 385. So that is still a 20% upside from current levels of 315, which is what we would expect ONGC to perform in the 9 months ahead to 12 months ahead time horizon. So we expect this cheaply valued company versus its entire refining peers to do outperform and the catch-up play to happen. If you see ONGC on a valuation metrics, it is still trading at 1.2 times its book value, which is extremely cheap. Another great point about ONGC is a very generous dividend payout policy, around 3% per annum. So that's very comforting. On dividend payout basis, cheaper valuations and inline earnings, we believe that ONGC becomes a good buy at current levels with a 20% upside and a price target of 385 for a 1 month horizon. It's a good, safe and steady bet at current levels.
Okay, and Raghavendra, a final company that we want to address is Tata Chemicals. It's not been the best of quarters, but perhaps on expected lines because the entire sector has been reeling under a tad bit of pressure. Still, your view here, and what would you do with Tata Chemicals at the moment?
So as you rightly said, the entire sector is under some selling pressure, but the numbers have been pretty much steady in terms of the earnings reportings of Tata Chemicals. We still believe that there is headroom for upside and a price target of 1250. Good corporate governance, steady income growth, and slow and steady capex plans. They are doing walk the talk in terms of executing their expansion plans. And the geographies of Europe and US, the numbers have been pretty impressive. So 1250 could be a target for a 1 year time horizon. Tata Chemical also is a safe bet in terms of their good management and a steady earnings growth.
All right, Raghvendra, we leave it at that. Thank you so much for joining us and taking us through your views on the 4 stocks that we wanted to talk about today. And with that, it's also at the end of this show. But stay tuned to NDTV Profit for more news and updates, and we'll be back in just a bit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple.
If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Let's be real, guys. There are many financial experts out there.
Well, there is a bit of a bounce in equity markets after Monday's carnage. The question is not just about what a trading mind should do, but even if you're an investor, how do you approach a situation which is as volatile and as uncertain as is right now, because there are 2 or 3 moving parts to this whole picture. Let's try and understand what a long-only fund manager is thinking about in a situation like this. Pankaj Tibrewal, founder and CIO of Ikigai Asset Managers, joins us right now on the show. Pankaj, great having you. Thanks for taking the time out, and an opportune day to have you really because of all that's happening around us.
Thank you, Neeraj. It's a pleasure to join the show.
Thank you so much.
I'm looking forward for the conversation.
Yeah. How do you think about what's currently happening, Pankaj? Because there is a fair degree of uncertainty with regards to the yen carry trade impact, with regards to what the Fed does or doesn't do and the resultant impact, and a renewed bout of geopolitics hovering above us.
So I think it was a combination of all 3. And, Neeraj, in various shows of yours in the past few months, we have been pointing about the excesses on valuations which have been created. And reasons are known on the hindsight always. And the reasons came in the form of yen carry trade, geopolitics, slowing down of US economy. But I think the trigger was that asset bubbles were getting created across. Look at what happened in the 2-week period. The US volatility index, which was sub 10 just 2 weeks back, touched a high of 80 yesterday. and think about the algorithms, the entire machine trading, portfolio-based things which created that. So I think one thing which we have learned over the last 2 decades is that it's futile to make a prediction about the future events. I think, at least for myself, I know I'm very realistic about my abilities in life, and it's very futile to make predictions of the future. What you have to focus on is portfolio construction to make sure that your portfolio survive across cycles. And I think this volatility is going to stay for some more time. And I think my sense is that there could be a shift in sectoral allocations after a sharp knee-jerk reaction which we saw globally over the last few days. And don't forget, in the last 3 trading days sessions in August, the entire gains in calendar year in Japan has been wiped off. Such are equity markets. So we believe that you should always weigh your risk reward. In today, many sectors which I see even in India, the risk reward is not in your favor. The valuations are excessive. There is narratives. There are thoughts, stories prevailing out there in the market, and one needs to be careful of what not to do. And I think this is a market of elimination rather than selection. I think you need to eliminate what you do not invest in, because many places I see there is a risk of permanent loss of capital because only narratives are floating around. There's very little delivery on cash flows and earnings.
I'm going to get back to these last 10 words that you used in just a bit, Pankaj, but I want to come to the major question first. Reasons come later, but reasons cause corrections. Is 4% a correction enough, or does it need to be more? Do you reckon it can be more?
It's a tough question, to be honest, Neeraj, but look at some of the data points. I think the market has been too charitable to all of us over the last 2 years. And most of the stocks have made you money across. When I look at the data points now, I believe that the market breadth has started to narrow down. Why do I say so? Last year, the earnings growth across on a headline basis was 30% for NSE 500 companies. And many companies delivered 50 or more than double their earnings also, because margin was an important lever for earnings growth. FY25, the first quarter had started on a very subdued note. 300 companies out of the 500 NSE 500 have reported till day before yesterday. And the headline number is just 3% earnings growth. And when I bifurcate this 300 into 2 parts, 71 companies are banking and financial services company. They have grown their profits at 21%. But the 229 companies are non-banking and financial services company. They have de-grown their profits at 11%. So earnings is started to slow down in our view. This year will be a difficult year. Not every stock would participate. And our sense is that the market breadth will get narrow, and markets are likely to consolidate at these levels. And it will be a stock pickers market as you move ahead in the next 12 to 18 months. So it's very important that you navigate the cycle quite carefully, because in a sideways consolidating market, there is risk of making mistakes. So overpay, stick to your fundamentals, stick to good promoters, good management teams, and good balance sheet and cash flows.
Pankaj, just wondering if the lessons of the last 2 decades have to be rethought a little bit, simply because of the difference this time around post-COVID of the very strong domestic flow, which is sticky. I mean, perennially for the last 2 decades, or rather for the last 2 decades, FI flows dominated, but they were also fickle in that they came and they went. We are seeing a very sticky nature of the domestic flows, right? 15, 20,000 or whatever the net number might be coming in every single month. Does that change the way you need to think about how stocks would behave? I mean, I remember the age-old thing was that when your panwala is telling you that ye stock le lo, that's the time to sell the market. The panwala has told me this for the last 2 years and the markets have still gone higher.
Absolutely, Neeraj. I think we all are, for the first time, seeing a tsunami of flows, and especially from the domestic investors. But don't forget that the basics of investors has been tested across last 100 years, and it's not today that these things are there. And over a period of time, my belief is that these fundamentals won't change. There will be asset bubbles which will be created. And one important saying which I always love it is that the asset bubbles, when it will end, nobody knows, but I only know how it will end. So you know that things when it becomes too much, finally at the end of the day, the asset bubbles try to, it's the unwinding is very painful. So I'm only suggesting that yes, flows are very strong. They will keep on supporting the markets. FIs to a certain extent have become irrelevant in the marketplace today. But don't deviate from your basic fundamentals. Flows will only be supporting your overall thesis. But when earnings growth starts to slow down, capital can evaporate from one sector to another very fast. And we're seeing in many of the names, just few thoughts, many names which were darlings of the market over the last 6 months. Over the last 1 or 2 months are down by 30 to 50%. So be clear that you don't get carried and swayed away by narratives. Finally, there is delivery, and you are there with good management and promoters. If you dilute any of these basics at the end of the day, short term you may become a hero because of the flows and other things, but over a medium to long term, there's a big risk of permanent loss of capital. And I only fear that one should not take investing decisions where there is a risk of permanent loss of capital.
Got it. So Pankaj, what are those pockets? I'm now referring back to the first answer, and then I'll wrap up with the portfolio construct. Where is it that you find that the narratives are so strong that it will destroy investor wealth completely? I mean, what are those themes largely where there is narrative not backed by commensurate earnings growth?
So let's take example of few of the sectors where there's significant exuberance. I may not say that they may lead to permanent loss of capital, but there's significant exuberance. Let's look at the overall market cap of defense and railways today. The combined market cap is at 18 lakh crores. FY19, the combined market cap was 1.2 lakh crores. So 1.2 lakh crores moving to 18 lakh crores, which means a CAGR of 67% on market cap terms. Now look at the commensurate profit CAGR. Over the same 5-year periods, it's about 21%. So you had a 21% earnings CAGR, but a 67% market cap CAGR. The earnings multiples have expanded massively. Many of the names on the EMS platform, where there is huge narrative about electronic story and other things, many companies don't make cash flow. So if you add over the last 5 years cash flow of these operating cash flow of these companies, you don't get a comfort. They are either flat or marginally negative. Their profits are growing, accounting profit is growing, but commensurate operating cash flow is not, which to me is always a recipe for disaster, because top line is vanity, bottom line is sanity, but cash in bank is finally reality. So you did not, deviate from such basics, because whenever market slows down, if you're not generating cash flow and only accounting profit, it will hurt you. And finally, you need to fund your growth either through debt or diluting equity. So in many cases, we are seeing some of these kinds of companies are tapping the market on a 6 to 12 months basis with equity.
Got it. Wow. Okay. So, well, viewers, do the research. I don't think Pankaj is saying that if you own a defense stock that is necessarily overvalued. It may not be. But do the research well on railways, on defense, on EMS, some of the sectors where the valuations seem very stretched. Pankaj, I would wrap up this conversation by asking you, where is it that you may be sitting on cash, which is fine, or you may not be. But what is your most overweight position currently, sectorally or thematically, and why so?
So, Neeraj, I believe that there are 3-4 themes which we are liking. First, I think consumption, and especially mass consumption, has been under pain for the last few years. We see that changing. And sectorally, if you look at the allocation of investors, it's at a very lower number today. So I think incrementally, when you see the results also this quarter, FMCG and consumer discretionary have started to show incremental positive change. And I think consumption on discretionary staples, mass consumption would be one place over the next 12 to 18 months. The second is the entire auto ancillary space. I believe there's a significant change happening in that space where a lot of auto ancillaries are also pivoted themselves to industrial parts. And many of them will see very strong earnings momentum over the next few years, not only led by autos, but also by industrials. And they are also significant players now in defense, railways, and stuff like that. So that's something, and valuations are not, very exorbitant. The third is pharma, and we saw the results on pharmas also, both on domestic and US generic. There seems to be decent delivery by most pharma companies. Fourth is financials. On the private sector, I believe valuations for the franchise and the deposit franchise they own, I think was quite reasonable. And after 3 and 4 years of underperformance, I think private sector financials can make a comeback. So these are the few areas where we are positive. And the contra bet will be chemicals. Incrementally, in this quarter, we have seen mixed response from few companies. Some companies have shown incremental positive change. Some are still reverting back to mean. I think this space, if it comes at a decent valuations, could be interesting space to look at. And last but not the least, I forgot, the entire power value chain. Valuations are challenging, but it's a mega trend in making, not only in India, but globally. I think transmission is one area where I think there will be significant investment globally being done, because the kind of electricity requirement we are seeing in terms of growth is unprecedented. 20 years, US was having a flat growth, and now after 20 years, you have seen 2 to 4% growth in electricity in US itself, and transmission grids are not equipped. So I think in US, globally, and in India, you will see huge capex on transmission, and hence the entire value chain starts to look very attractive. Valuations are only challenging right now. So in this correction, if we get some good names at a decent valuation, that's one area to look upon.
Pankaj, so good talking to you. Thanks for sparing the time today and talking to us. Really appreciate your time.
Thank you, Neeraj. Thank you.
And viewers, thanks for tuning in.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with.
Welcome back. You're watching Market IQ. I'm Mahima Vachajani. Well, the D Street remains IPO frenzy. First cry, Unicommerce open for subscriptions. We spoke to the management of both the companies about the outlook of the IPO and the expectations they have ahead once the IPO opens. Let's hear their view.
Just as a backdrop, I would say First Cry was started in 2010, late 2010, and we are the largest shopping destination for mothers, babies, and kids in the country. We operate, in all three demand pockets where young parents or young mothers buy from, which is online, which is 75%. I'm talking about India multi-channel, which is 75% of our GMV. We operate also 1,000 plus stores, and which gives us almost close to 26% of our GMV. And then we recently forayed into taking our home brands to pharmacy and grocery stores as well, where that's a third demand pocket. Having said that, our business model is essentially we are the largest shopping destination for mothers, baby, and kids. But over a period of time, we have also built a very curated and widest assortment of 1.65 million SKUs across 7,500 brands and a growing range of home brands as well that we have been able to build out. Within that home brand, we Have Baby Hug, which has also become today India's largest multi-category mothers, baby, and kids product brand by GMV. And as a matter of pride, Baby Hug has also become the largest product assortment brand in Asia Pacific, excluding China. And with that, with such a massive framework of SKUs, brands, home brands, shopping destination of 1,000 stores online, and grocery and pharmacy stores, we also run India's have largest parenting channel on YouTube, plus our entire parenting community where young mothers come and build a relationship with us right from the time she conceives a child, during the pregnancy, post-pregnancy, up to a certain age of the child. And all that relationship is being built through the pediatricians, gynecologists, and all of that help, all kinds of trackers that she needs. And that relationship transforms into a shopping relationships over a period of time. So we give a kind of a new age economy, a 360-degree retail framework to build a relationship with young moms and young fathers. So that's the business model that we have been able to establish and built our several modes around, expanding the frameworks around online, offline, and supply chain, investing in brands and technology, and so on and so forth. So that's broadly the essence of our business model that we have been able to establish over the last 13 years.
If I look at the pricing, it's at slightly discount to the last fundraise that you did. Any reason why you have reduced the pricing or coming at a discount?
So Sujit, price discovery is a process. We have been running this company for almost since 2010. The board appointed BRLMs, the banking partners, who in this process we met as management teams, domestic and foreign institutional investors, in India and abroad, and BRLMs have taken the feedback from these visits and meaningful meetings that we have done, that has translated into certain recommendation that BRLMs made to our board of directors, and that is how this price discovery has been made for this public market issue.
At revenues of 6,480 crores, you have turned EBITDA positive at 70 odd crores in FY24, and my question is that is this a continuous thing, or do we see now continuous EBITDA positive coming in from your end, and what is the path to profitability as you go ahead?
No, fair question, Sudhit. So I think, look, if you just focus on our core India multi-channel business, which is the core and the large part of our business. If you will focus on that, our adjusted EBITDA profile has been continuously improving. If you look at FY22, we were at 5.9%. If you look at FY23, we were at 6.2%. And in FY24, we became at 8.8%. So we've been continuously improving our adjusted EBITDA profile over a period of last 3 years. We hope to continuously improve even going forward, even at a console level, where we consolidate our India multi-channel. Our international and global bees businesses are slightly relatively younger. Our international business has been 4 to 5 year old. Within that, the Saudi Arabia business we started in August 22 is less than 2 year old, and global bees business is almost 3 year old. These are younger businesses. Obviously, they are in relatively not a mature stage. Even our India multi-channel is not in our mature stage of our EBITDA profile. Having said this, even at a console level, our adjusted EBITDA has increased from 1.5% to 4.2% from FY23 to FY24. So we've been able to demonstrate a continuous increase in our adjusted EBITDA, our operating profitability over a period of time. And as I said, we are yet to reach to our steady state over a longer period of time.
So essentially, we in the e-commerce value chain, as a consumer, when you're ordering, you see the interface on which you're placing your order, and you see the delivery boy that's getting the item to your doorstep. Whatever happens in between, we are powering that entire journey. We are this invisible force behind the entire e-commerce backend to make sure that everything happens seamlessly, right from the time the order is placed till the time the item is delivered. We are the largest player in this transaction processing layer, which is this invisible backend that I was referring to. We have, in terms of our business model, we are charging our clients basis the number of transactions that they process on the platform. So as the number of transactions grow in the country and on our platform, the revenue continues to increase. We serve a very diversified base of very marquee clients, both in India and international markets. We serve digital first brands, the likes of Mamaearth, Lenskart. We serve offline first brands, the likes of TCNS, Paragon, and also marketplaces such as Pharmacy and logistics players such as Expressbee. So we have a fairly diversified base of clients and catering to multiple categories as well as varying scale. The platform is flexible to work with a large enterprise which may be processing millions of orders to a small SME which is processing only a few hundred orders a month. The platform has also been around for more than a decade, so we have built a very comprehensive product suite to be able to cater to wide variety of use cases and is deeply integrated into the technology stack of a seller. That's why we have very long-term relationships with this customer base and gives us the ability to further cross-sell other offerings. So we continue to be a backbone for the entire e-commerce, and we are ensuring that we are shielding the entire complexity for the brand. Our motto is to simplify e-commerce selling, and that's what our platform does to enable or free up the brand to focus on their brand and their customers, and the entire complexity behind the backend is taken care of by this solution.
Basically, so you bringing the digital experience between ordering to delivery. Basically, that's what it means. Kunal, give us a sense of how this in unique space is growing. You are a veteran in the e-commerce space. In terms of volumes, how have you seen the volumes growing, and are you seeing a trend of more and more online transactions going through as we speak?
Yes, Sajid. I'm now a grey-haired person in this e-commerce industry, and having started, more than well over a decade back, and every year since my journey started in e-commerce, everyone has always said, this won't work, that won't work. I remember in the early days, people used to say, no one will buy anything online. Then they started buying mobile phones. And then people said, okay, it's a standard product, but people will never buy fashion online. And then people started buying clothes online. And they said, oh, they'll buy fashion because they can get it fixed from a nearby tailor, but they'll never buy shoes online. Then people started buying shoes. And then people said, oh, but they will never buy beauty online or pharmacy products online or food online. And we have seen how that has played out. One thing is very clear, that in India, e-commerce will continue to grow. And the long-term landscape for e-commerce is extremely vibrant. To put it in context, right now, there are probably 4 or 5 billion shipments, e-commerce shipments that are happening in India every year. In China this year, this number will be about 150 billion shipments. So there is so much headroom left to grow in India that is almost mind-boggling. And as these volumes of e-commerce in India grow, the level of complexity that a brand or an SMB, a small seller in Surat has to face is also increasing very dramatically. And this is really where Unicommerce comes in, where, as Kapil rightly said, if you're selling on 5 marketplaces, you're working with 5 logistics partners, you have maybe a small ERP also installed, you have to do payment reconciliation. It is very complicated for an e-commerce brand to run an online business these days. Gone are the days where it was 2 marketplaces and 1 logistics company. E-commerce is so complicated that Unicommerce has now integrated with 240 plus different ecosystem players, and we provide a plug-and-play integration for every e-commerce brand. So they don't have to go integrate with these 240 plus various ecosystem players, whether it's logistics players or marketplaces or ERPs. They just have to integrate with Unicommerce. So that's how we simplify e-commerce for these brands. Separately, your question was around e-commerce volume growth on Unicommerce. Every year we've seen our shipments grow that are being processed on Unicommerce. We currently have a run rate of about 790 million items processed every year. That is a very, very large number, and a sizable share of India's e-commerce volume. So we are very dominant in the area that we operate in.
Well, that was the management of Unicommerce eSolutions. Just for viewers' perspective, both the IPOs, Unicommerce eSolutions and FirstCry are open for subscription from today. But with that, it's a wrap on the show. Stay tuned to NDTV Profit for more news and updates.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Bro, what are you doing?
I'm trading FNOs.
So?
Benchmark steady, Nifty now trades above 24,200 and the Sensex is up over 400 points. All sectors trade in the green. However, financials trade marginally in the red.
Media, realty and metals gain the most. And it's a positive debut on the bourses for Akums Drugs. The stock lists at a 7% premium to its issue price. Unrest continues in Bangladesh. Protesters push for Nobel laureate Muhammad Yunus to lead an interim government in Bangladesh. Back home, External Affairs Minister S. Jaishankar is expected to give a statement on the Bangladesh issue. Hello and welcome. You're watching Market IQ. Let's take a quick look at where the markets are at first. The Nifty 50 as well as the Sensex are up by over 0.5%. We were off to a great start in today's day of trade and we have lost some momentum. The Nifty 50 is down by about 200 points from the day's high, but very much in the green. So, given what the markets looked like yesterday, this is not too bad. Let's also take a quick look at the key stocks in the Nifty 50 and how those are performing. Among the top gainers is Britannia, Adani Enterprises, JSW Steel, to name a few. But it's predominantly RIL, L&T, HUL, ITC that are among the key contributors pushing up the Nifty 50. What's not performing particularly well is Bharti Airtel, ICICI Bank, HDFC Life and HDFC Bank. A little bit of a drag collectively, about 20 to 30 odd points put together, but not too bad, with most stocks on the Nifty 50 advancing versus about 9 to 10 stocks that are declining. Let's also take a quick look at the sectoral indices and how those are performing. The Nifty Bank is in the green currently. It's up by about 0.1% and up by around 50 points or so. But it's Realty that's in the lead. It's up by over 2%. Media, metal, energy and PSE are among the top gainers, all up by over 1%. What is down is Nifty Finance, but that too only marginally so. Let's also take a quick look at the broader markets, which continue to outperform the benchmarks. The Nifty Mid Cap 150 as well as the Nifty Small Cap 250, both up by over or just about 1%. Let's also take a quick macro check. India's Monetary Policy Committee is currently meeting and the committee is set to announce its decision on Thursday. This is its first meeting after the presentation of the final union budget and after the Fed signaling chances of a rate cut in September. It's also the current MPC's last meet before its term ends and new members are appointed. Now, during the tenure of the current MPC, the 4% target has eluded the committee, but for justifiable reasons, such as the ongoing volatility caused by vegetable prices currently. Let's take a quick look at what's the setup looking like this time around. Inflation has seen a modest uptick since the last policy meet in June. Economic growth, however, continues to remain fairly robust. That does appear to set the stage for another status quo. All economists polled by Bloomberg expect the MPC to maintain a status quo. The current benchmark lending rate is currently at 6.5% and it's likely to remain unchanged. India's retail inflation, meanwhile, like we said, has surged to a 4-month high in June. That was largely on the back of continuing rise in vegetable prices. Inflation came in at 5.08% in June, and that was compared to 4.75% in May. Now, going forward, the IMD has forecasted above normal rainfall for the remainder of the southwest monsoon season. So that's something that's expected to continue to be a positive. It does augur well for replenishment of reservoir levels and for the further progress of Kharif sowing. Meanwhile, the Indian rupee continues to touch record lows against the dollar. That's despite the plunge on the dollar as markets price a dovish turn by the Fed. Analysts do forecast the rupee to continue to trade with a slightly weakening bias, but the central bank continues to actively intervene, and that's probably what's preventing the rupee from breaching the 84 mark. Now, moving on, one of the stocks that's in action today is Brigade Enterprises. It's up almost 5% today. This is on the back of the company's first quarter earnings. Brigade's net profit has surged multifold to 80 crore rupees in the quarter. My colleague Anushi is here with more details on the stock. Anushi?
Right, so now if you have to look at Brigade Enterprises numbers for Q1, quite a set of decent numbers that we are looking at. The revenue saw about a 65% jump to 1,078 crore, while the EBITDA also in line with the revenue growth saw about a 67% of a jump. So both of these metrics are above the Bloomberg estimates of 1,031 crore and 273 crore respectively. Margins also moved inched upwards to 27% as compared to 26.8%, and net profit, though it recorded about a 3.6x jump to 80.5 crore, this was still below the expectations of 97 crore. But this was on the financial metrics part. But even if you look at some of the other key metrics, which is the pre-sales, or rather the sales booked for projects under construction, the pre-sales saw about a 9% growth at 1,086 crore.
Thanks a lot for that, Anushi. We will possibly come back to you over the course of the day, but there's some breaking news coming in. The rupee has breached a fresh record low and it's trending currently at 83.95 against the US dollar. We have been seeing the rupee breaching fresh lows, especially after what was happening on the Asian markets and the weaker global cues that were coming in from the US as well. So this is all happening despite a dovish turn by the Fed. The dollar index has been hovering around the 102.8 mark. Markets are assessing greater chances of a US recession. The US ISM services PMI that was released yesterday did show a bigger than expected rebound though, at about 51.4. That was against market expectations of about 51. Also, the jobs report, of course, was the latest that did signal a weaker than was being anticipated US economy, and that was primarily what was stoking concerns of a possible recession in the US markets, causing markets to price a larger 50 bips rate cut in September. The Japanese yen, meanwhile, did retreat from 7-month highs towards 145 per dollar. That was amidst the unwinding of carry trades slowing, while markets continue to assess diverging monetary policies. So all in all, a whole host of pull and push factors, but the rupee continues to very clearly have a weakening bias given what's been taking place in the Asian markets, alongside slightly contrarian action that's contrarian cues that are coming in from the USD. Clearly pressure, importers continuing to pile up on the rupee, but we will continue to keep a watch on the rupee. So far we have been seeing the rupee weaken, but it's still not breached the 84 mark. So far the commentary is that RBI intervention will prevent it from breaching that mark, but we will continue to bring more on that. Let's move on to the next stock in action, Sirma. That's also reported its first quarter numbers. The stock was down 8% at one point. It has come off the day's lows now, but the revenue has surged 93%, even as profit declined by 28% on the back of margin contraction. Puneet joins us with more details on that stock. Puneet?
Well, thanks for that. So it did show a really strong revenue growth this quarter, roughly 93% compared to the same time last year. But margins as well as profitability was down in this particular quarter. EBITDA was roughly down 1%, while net profit was down 28% in this particular quarter. Now, this has been led due to an increased focus of the company on the consumer business, which is margin dilutive at the moment, and they had grown roughly 166% for the consumer business, while other businesses such as industrial and automotive saw roughly 20 to 30% growth. Now, when you look at the key highlights, the company had export revenue of roughly 16% in this particular quarter, which is down from the 20% target they have for each quarter, and export also has higher margins, so that is another impact on them. The other thing is that, roast was down for the particular quarter as well. And they have mentioned that they are expecting in the next 3 quarters to have stronger growth. Now, there was a conference call held today at 10:30, and the management did highlight that over the next few quarters for FY25 specifically, they are expecting other high margin businesses to come back. That might have been potentially one of the reasons why the stock price has recovered from the day's low. But we also did speak to the management this morning, Mr. Gujral, the MD of Sirma SGS. Listen into what he had to say.
The quarter has been good. We have grown by 92% odd in the total revenue of the company. And as I had said in my earlier calls, that the business mix is seasonal. So in the first quarter, we saw a high proportionate growth of consumer business, which stood at about 54%. Now, this 54% consumer business led to a contraction in the material margin. We had a 4% saving in the operating overheads, and hence the EBITDA margin contracted by about 2%. So we're very confident that going forward, the annualized earnings which we had guided and the EBITDA margin, the plans remain intact. The high margin business would kick off in the coming quarters. First quarter was comparatively slow on exports also. Exports were only 16% of our revenue, against a targeted figure of 20 plus. So going forward in the remaining 3 quarters, we believe and we are confident that the business would come back to normal with the revenue growth of what we had guided, and EBITDA of about 315 crores is in line of achievement.
Right. Tata Power is set to come up with its set of numbers today. My colleague Mika joins us to tell us what we can expect from the energy giant. Mika.
Yes. So, Tata Power is set to post its numbers today, and revenue may rise 10.8% on a year-on-year basis for the consolidated company, according to Bloomberg estimates. EBITDA may be flat, and margins could see some contraction to 17.8% versus 19.6%. However, net profit could see a rise of 9.3% on a year-on-year basis to over 950 crores. Factors that would impact earnings in terms of higher revenue, the company is set to benefit from the drop in coal prices. The thermal and solar power generation is also expected to grow for the quarter, given the peak power demand, and even thermal plants are expected to clock a higher plant load factor, given the government's mandate to ramp up thermal power generation during the peak demand that we saw in Q1 FY24. Also, the renewable power focus of the company to benefit the companies in terms of earnings. And one thing you need to watch out for is the capex and expansion plan, especially for the renewable segment that the company has aimed to ramp up in its entire portfolio mix.
Thanks a lot for that, Mika. Bharti Airtel was also one of the companies that reported its earnings for Q1 yesterday. Its net profits swelled 158% on an annual basis to about 4,160 crore rupees. That was from 1,612 crore rupees in the corresponding quarter last year, and this was ahead of street expectations. This was mainly helped by exceptional items. Let's go on to my colleague Rucha with what brokerages have to say on that stock. Rucha?
Thanks. So talking about the numbers, Bharti Airtel reported its first quarter FY25 numbers, talking about the India operations, which is one of the majority of the segment wherein Bharti Airtel operates. Revenue was up about 2%. Margin came in at 53.7% versus 53.6%, so largely in line with what we saw in the last quarter. Net profit was up 7%. Wireless business revenue was up around 2%, again on a quarter-on-quarter basis. So healthy numbers on the India operations, but when we look at the consolidated operations, the numbers were a little weak, but in line with estimates, and this was largely because of the consolidation of the African business. Now, African business performed weak due to the currency devaluation that it saw. Now, talking about ARPU numbers, ARPU also came in a tad higher than the last quarter at 211 versus 209 rupees, and the management expects ARPU to be at around rupees 300 for financial stability across the telecom business. Lastly, moving on to what brokerages have to say, Citi has a target price which implies a 19% upside, which is one of the major which the company has, and it also believes that the Bharti Airtel has strong FCF because of deleveraging, and this might imply higher payouts for shareholders.
Thanks a lot for that, Rucha. With that, it's time to slip into a quick break, but we leave you with some market opinion from Nilesh Shah of Kotak Mahindra AMC. Listen into what he had to say about domestic buying and valuations of Indian markets. We'll be right back.
If we look at India position, my feeling is that investors will look to buy into correction. Let's look at from a foreigner's point of view. The foreigners are today either equal weight India or marginal underweight India. There is a reasonably good chance that India's weightage in MSCI Emerging Market Index will go up. This will make many foreigners underinvested in India. Can they afford to remain underinvested in a growth market like India? Answer is undoubtedly no. So they will be using correction as an opportunity to invest. In every single IPO coming out of India, OFS coming out of India, we are seeing foreigners looking to buy and compete with mutual funds aggressively. Now let's look at domestic investors, insurance, mutual funds, pension funds. We all will be a buyer of India growth story. Let's look at retail and HNI. People who are expressing bearishness in the market are ultimately looking to buy at correction. So overall, my feeling is that corrections will be bought into. This time, investors have also become matured. This is real life Lagan movie being playing out. As you know, in Lagan movie, local team defeated foreigners. In COVID time, we saw One Day International being played out, where foreigners were selling for March, April, May, June, July 2020. They sold close to 70 to 80,000 crore cash equity. Retailers via mutual fund kept on buying. Then foreigners realized that Lagan mein jeetna mushkil hai. So they started playing test match. From October 21 to June 22, they sold 250,000 crore worth of equity.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome back. You're watching Market IQ on NDTV Profit. Now, with the rupee having breached fresh record lows, we're going to listen into Abhishek Goenka from India Forex Asset Management on his quick views on the rupee currently. Abhishek, thank you so much for taking time out on such short notice. We've been seeing the rupee breach fresh record lows on a near consistent basis. Are we now looking at the 84 mark against the dollar?
Hi, good afternoon. I think the rupee was already pretty overvalued against the Asian currencies like China and all. So in fact, RBI let it depreciate And with regards to China, it has already corrected by around 3.5% since yesterday to take it the CNY China pair. So I think RBI will slowly allow slight depreciation in the rupee. Having said that, the major purpose and the mandate of RBI is not to let too much of volatility on this pair. So it will be a slight depreciation towards 84, 84.20. But I don't think that they will let a runaway depreciation in the rupee. I think on the higher side, I think 84.40 would be capped. And on the lower side, I think 83.40, 50 would be the lower level. But broadly, I don't think there will be a runaway depreciation.
Okay, all right. So, Abhishek, help us understand some of the factors at play here. The depreciation we're seeing in the rupee is despite, some appreciation in the dollar index.
Yeah. So, we are seeing that the currencies like Euro and GBP, etc. are going up. Having said that, we are still seeing some depreciation in the rupee because we are seeing sell-off in equity markets. That's one. Plus, there is an element of risk aversion. And whenever there is a risk aversion, the US dollar gets slightly stronger against the Indian rupee. And I think that is what is been playing here. And we are in emerging market economy currency, so typically it depreciates when there is an element of risk aversion. Even though US is cutting rates, I think there will be some element of appreciation for the rupee. And RBI is taking this opportunity to let the overvaluation of the rupee correct.
Okay, all right. And what are the cues that we're going to be looking out for over the course of the next few trading sessions on the rupee?
So I think the most important thing we have to see that whether the carry trade unwinding, how long it goes. My experience, looking at the earlier carry trade unwinding, it typically doesn't get unwind in 2 or 3 days. The process has started from 160 to the yen against dollar. If I have to take the midpoint of yen and dollar, it is somewhere around 125. So I think there is room for another 15-20 large figures to go in Japanese yen. So I think it could be a slow grinding process in the next maybe 3 to 6 months. And then possibly we could see some mid-level coming in. I think meanwhile, I think rupee will be slightly depreciating bias. So buy on dips on the pair would be seen. And I think even the importers who are very, very conservative and sitting idle for a very long time, I think they will start coming into the market and start buying since yesterday. They've already started buying. So I think we need to see how the quality of the data in America comes, because then the expectation is the rate starts 50 or more, or how frequently after 50. That is something that has to be seen. The unemployment numbers, the next unemployment numbers, and the other growth numbers in America. And also, to an extent, we can track the FII selling in the country. Yesterday also they sold 10,000 crores. So I think carry trade, the US data, FII selling in the country, and RBI function, which I think is going to be mostly controlled.
All right. Thanks a lot for that summary, Abhishek, and thank you once again for taking time out for us. But moving on, unrest in Bangladesh continues. Protesters are pushing for Nobel laureate Muhammad Yunus to lead an interim government in Bangladesh. Now, this comes a day after PM Hasina quit and fled to India. I'm now being joined by Mohammad Ibrahim Mojid of Dhaka Tribune, live from Dhaka to get us the ground report. Ibrahim?
Hello, I am in Dhaka right now. As you can see that everything is almost back to normal. However, the police forces, they are not there. Some of the police forces, they abandoned the police stations yesterday. So students themselves, they took control of the traffic and the current law enforcement activities. That's what's happening. Almost everybody is back to office except the government employees. They tried to go to the Secretariat. However, they left around 12 p.m. Bangladesh Standard Time.
All right, you know
So
what
you can see people are waving flags over here right now. They are celebrating. Celebration is not over yet. Hello. Yes, please.
Right. Okay. So tell me, what is the political scenario like at the moment? While you've said that on the ground the situation is normalizing, we have been hearing of conversations regarding the interim government being sworn in. What is the latest on that?
So latest that interim government hasn't sworn in right now. Dr. Mohammad Yunus, a Nobel laureate, the students of the quota movement, they proposed his name as the leader of the interim government, and as far as I know, Yunus agreed to it. However, we do not want an interim government. The students and the people of Bangladesh do not want an interim government. They want a democratically elected government right now, as Awami League is almost inexistent in Bangladesh right now. There is a very big power vacuum. Awami League was one of the oldest party of the country. Now it remains a question that who will come to power, and students are demanding for a free and fair election.
All right, thank you so much for that update, and we will continue to bring the latest on that over the course of the day. But following the all-party meet on the political tensions in the country in Bangladesh, S. Jaishankar is also set to speak on the situation. NDTV's Vasudha Venugopal joins us to outline what we can anticipate.
Well, what I understand is that the ME officials, Vikram Misri, has been having a lot of meetings yesterday. Today also Jaishankar came in and he left immediately because, you know, there is a crisis at hand and he has to solve that. We are not yet sure as to where Sheikh Hasina is. She has been transported to a safe house, is what we knew last night. But of course, India also has to show this message that it stands with friends. At the same time, it is ready to do business with whoever is in power. Remember that Khalida Zia's party, the BNP, or for that matter, the Jamaat, have not been very great to India because they've also been allegedly promoting extreme elements. At the same time, they've also been in some ways promoting an anti-India stance, which is what we saw in some of the protesters there. We have had this situation with Maldives, which is why I think MEA is quite adept at handling the situations. There is a need for tact diplomatic moves, and of course, at the same time handling the security issues at home, because there are at least 6 states which will have to face the brunt if there is sort of a lot of infiltration or for that matter migration that happens, which is why India is taking a very careful, cautious stand, monitoring the situation, at the same time showcasing to the world that it stands with friends, but at the same time is ready to do business with whoever comes to power.
Right, thanks a lot for that, Vasudha, and that's all we have on the show for now, but do stay tuned to NDTV Profit for more news and updates. Thank you for watching.
When the whole day passes like a blur, the news just whizzes past, and you are trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome. You're watching the Mutual Fund Show. I'm Tamanna Inamdar. This is the show where we talk about all your mutual fund investments and our experts answer your queries. But the topic that we're diving into is fixed income funds. Now, in the budget, it was expected or hoped that indexation benefits would be brought in for debt funds. I mean, nothing of that sort happened. In fact, there was indexation benefit removed for other asset classes, but that's a whole different story. The question that we're asking today is that looking at the recent changes, especially in capital gains taxation, looking at the changes that have not taken place in indexation, how do you view fixed income investments or fixed income funds? Does this make equity schemes or hybrid schemes, that is a blend between equity and debt, more attractive? We'll explore how all these changes affect post-tax returns, especially for those in higher tax brackets, and discuss whether debt funds are still a strong option and for which kind of investors. To speak more on this, I'm now beginning the conversation with Rushabh Desai, founder of Rupee with Rushabh Investment Services. I also have with me Santosh Joseph, founder of Germinate Investor Services. Welcome to both of you and thank you so much for joining us today. Rushabh, let me begin with you. It's, I think, a post that you put out that sparked this conversation and this idea. So let's, start with that. How do you look at fixed income funds in terms of how attractive they are post the changes which took place in capital gains tax and those that didn't take place in terms of what was expected in indexation? Where do you stand now on fixed income funds?
Hi, Tamanna. Thanks so much for having me on the show. See, to be very honest with you, technically speaking, there is no alternative to debt funds. Okay, today, debt funds still remain a very attractive product, for conservative investors, looking for lower risk. Okay, when any product has equity component, it increases the risk in that product. Okay, with no indexation benefit, of course, definitely the returns will be impacted, especially for those who fall in the higher tax bracket, because now directly the income is taxed as per your respective slabs. Now there are three reasons why I feel that debt can be a lucrative bet for the next 2 years. Currently the interest rates are in the peak range. It is around 7-8%. Second is that the interest rate cut cycle has not yet begun, which is expected to begin probably end of this year or maybe early next year. And third, we have already come under the JP Morgan's bond index, and from January 2025, we are going to come in the Bloomberg emerging bond index as well. So this will pump in a lot of foreign money in our Indian bonds. So all of this will definitely, give benefit for the existing bond investors from a mark-to-market level. Regardless, having said that, however, increase will be in the returns. Currently the YTM, the yield to maturity are of AAA bond yields are somewhere between 7-8%. Even if it goes probably 1% or 2 higher than 7-8%, the higher tax bracket people will definitely be affected the most. Okay, even if you're paying 30% tax, it is going to substantially impact the returns in the debt funds. Now, I see one very good alternative to this purely from a tax benefit point of view is the beautiful category called equity savings scheme, equity savings fund. Now, what this does is that these particular funds invest in equity, pure equity, arbitrage, and debt. Now, if you choose this product very wisely, if you see these products range, their equity portion can range from say 15% to probably 50-60% as well. So it is very important to choose the right product, the right conservative product. So if a client or if an investor chooses this product, say like between 15 to 25% in pure equity, the rest in arbitrage and debt, I think from a taxation point of view, this can be a wonderful product because these products follow equity taxation. So if someone holds these products, equity savings scheme, for more than 24 months, which is more than 2 years, they are going to be taxed long-term capital gains flat at 12.5%. So regardless, whatever slab you fall in, whatever income you have, these products will charge you flat 12.5%. But it is very important to keep in mind that the equity component, the pure equity component, should not go beyond 25%. So that is how it will be still beneficial for conservative products.
Okay, so the equity component should not go beyond 20% in any of the hybrid funds you look at. Santosh, this is a very important point. Do people need to review what their fixed income exposure is after the budget? And also, let's keep in mind what has recently been happening in equity markets, fair bit of volatility. What would be your take?
I think let's begin by addressing a very important aspect that fixed income has actually got no alternative. In fact, for long we were saying that equity will do well because there is no alternative to make good money and inflation beating asset. Likewise, notwithstanding the negative impact of taxation on debt funds and fixed income funds, I think even for fixed income, there is no significant alternative standalone for the risk category that you're referring to. So while Rishabh was saying that you have to look at products which have less than 25% equity, that is true. But you also have to understand that even this 20-25% equity in a volatile market like this can be unnerving to people who are coming in it for the first time. Now, you compare even a 20% equity to zero equity in a fixed income fund from a year from now when the markets are going to be choppy, it will have material difference in the return of the product and also the way the customers perceive it. So therefore, I agree with Rishabh that the equity savings as a hybrid category where equity can be sub 20 or 25% range is good for an investor from a post-tax basis. But I think for an investor looking solely for stability, solely for capital protection, largely in terms of not losing capital, but preserving capital and having some kind of a stability and income combined into an investment, you still have to fall back on the fixed income or debt funds. Now, not to forget that within that, there's a wide range from ultra short term to liquid to even corporate bonds and gilts, where again a play on duration or play on interest rate cycle could be beneficial, notwithstanding the impact of taxation.
Okay, so now if you want to sort of look at what's happening right now and basically have a little more conservative approach. Rishabh, let me come to you on this point. I understand that with the long-term capital gains tax changes, with the lack of indexation, debt funds have become perhaps less attractive. That's why you're saying hybrid. But if I wanted to be a little bit safer, considering that there is more volatility right now, what are the best kinds of fixed income investments I can make?
Tamanna, see, I agree what Santosh had to say that, if, again, this equity savings scheme is purely from, tax benefit point of view and someone would require higher yields. So even though when I say that, it can be a good bet for conservative investors, as Santosh correctly said that, even a 15-20% equity exposure during a massive drawdown in the equity markets can hamper these products. Okay. So it's very important to keep in mind that, when someone enters in equity savings funds, they should have a minimum time horizon of around 3 to 4 years. Okay. If someone is having a time horizon of say 1 year or probably 2 years, then probably this is not the right category to go into. Now, as mentioned earlier also that, debt funds will be beneficial from the following reasons, which I just mentioned earlier. I think today, if someone wants to take a conservative bet in debt products, I think corporate bond funds with an average maturity of probably say 4 to 6 years would be a good bet. Banking PSU funds, again, between average maturity of around 4 to 6 years, and some tactical allocation can be given into long duration G-Secs funds. So again, let me put it very straight that, for safety, capital preservation, of course, then venturing into the debt space makes more sense. But if someone wants a little bit higher yield, someone can take little higher risk, like kind of an FD plus kind of returns, then equity saving schemes can be a good bet, Tamanna.
Okay. What do you feel about equity saving schemes, Santosh, if you do not need this product for tax saving?
You don't necessarily look at it from a tax saving perspective, and if you have a slightly extended viewpoint. Now, for many people, equity savings is their first step towards venturing out into equities. They do not or cannot afford the huge amount of volatility that equities give them. So an equity saving, and especially the category that we spoke about, that was having a low equity exposure. Back in the day, about 10 odd years ago, we used to call them the MIP plans, but today they've rebranded themselves as equity savings, where the exposure to equities between, let's say, 15 or 20%. For an investor who's got the time, who wants to better fixed income and wants better post-tax income, it's still a good option. But remember, it comes with its own risk in terms of time. It's not going to be a plain vanilla debt apple to apple comparison. If you want to do better than debt, and if you have the time frame and you can stock a little bit of volatility, equity savings is definitely a way superior alternative to standalone debt.
All right, let's take some queries now from our viewers coming in. In fact, what we'll do is we'll take a very short break, but we'll come right back, take your queries and get Santosh and Rishabh to answer these.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Lord Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Welcome back. You're watching the Mutual Fund Show. It's that part of the show where we take your queries, and if you want to reach out to us, you want our experts to answer your questions, well, the number is on your screen. Let's start with what Hemant has to say, age 32. Hemant asks, are gold ETFs cheaper now, and is it a good instrument to play the rate cut theme over gilt for the next 2 to 3 years? That's very interesting to ask about gold. Gold has seen a lot of volatility as well over the last few days. There is a crisis, geopolitical crisis simmering in the Middle East. Will this have gold prices back up even further, or will we see a bit of a slowdown right now? Either way, are gold ETFs cheaper now, and is it a good instrument to play is the question. Rishabh, let me come to you first with your response.
Tamanna, see, gold has fallen in the domestic market. If you see the global prices of gold, they remain elevated the way they are. See, mainly in the domestic markets, the gold has fallen because the finance minister has cut the customs duty on gold. But I would still bet on gilt products from a 2 to 3 year perspective over gold. See, although gold prices are expected to be elevated for the next 2 to 3 years, because what happens is that, number one, we are facing a lot of geopolitical crisis globally. So a lot of money will come in gold, which is a safe haven. Number two, central bankers globally are purchasing gold left, right, and center, especially China. So, and third is that, when the interest rate cut cycle will begin, I think more money will come in gold. But again, See, gold has already, factored in a lot of things and is already trading at some decent elevated levels. So I don't think gold will probably go aggressively higher, maybe at a moderate pace. But I think I would still choose gilt funds from a 2 to 3 year perspective to play the rate cut bet.
Santosh, what would be your response to Hemant's query?
It's an interesting question because you're comparing two different asset classes. Of course, gold is a little cheaper domestically, but I think the Hemant should clearly know that one is gold and one is GSEC, and in one you're betting against a softening interest rate. On the other hand, gold is at least seen as a lot more stable for investors like these. So I would suggest that please understand why you're making this investment. While from a return perspective, there looks like gilts can really give you a nice upside considering that we're in a softening rate regime. But some of us also have these liking for gold, or you want to hedge some part of your portfolio. So purely it's a discretion of the portfolio. It's two different asset classes. I hope Hemant understands the benefits of both.
Okay, so which one would you prefer? His question is, are gold ETFs cheaper now? And is it a good instrument to play rate cut theme? You're saying the question is a little confused because they both are.
No, I think I would go with gold, though the other option is quite tangential. I'd still go with gold because I think there's enough of opportunity, I believe, even in gold, especially with the depreciating rupee and the volatility that we're seeing globally. Gold may be a nice hedge to the overall portfolio and also may give you some decent upside.
Okay, Sadat writes in, age 54, says, I've invested 8 lakh rupees recently in a Bajaj multi-asset fund. This is my first foray into mutual funds. What should I do? All right, Sadat, thank you for your question. Santosh, I'll come to you first. It's his first foray, 8 lakh rupees in one particular fund. What would you advise Sadat?
I think Sadat has started off on a good note because today, in the present context that we are, multi-asset funds are a good way to start. Like I said earlier, that for a conservative investor, equity savings would be good to start. But for an investor looking to participate in the growth and not sure how to build a portfolio, he does not have help. Multi-asset funds are a great opportunity because it helps you get the benefit of more than 2-3 assets. Number two, it also helps you navigate between when to reduce exposure to equity, to gold, to fixed income, to international assets. So therefore, I think it gives you a well-rounded portfolio. I would say good start. But as your portfolio and even your experience, or maybe even the surplus funds that you have grows, you can maybe add a multi-cap or a flexi-cap or whatever your risk-reward appreciates for you. You should add that. But to begin with, I think he's done a good job by starting off in a multi-asset fund.
Okay. What should be the next step then for Sadat, Rushabh? What would you advise?
I think, diversifying a little bit, makes more sense because he's concentrated on only one product. So I think having 2 or 3 products probably of the same category or also dynamic asset allocation funds would also be great. See, one drawback multi-assets fund do have that because they have multiple asset classes in one product. So the fund manager needs to take very precise calls. So if the call goes wrong, then it can take a little bit of a hit. And also since these products do have 3-4 asset classes in one, so what happens is, see, currently all asset classes are doing great, whether it is equity, debt, gold. But what if, say, like 2 or 3 asset classes don't do well? So this product can be, I won't say volatile, but this product can be little cyclical comparatively. So I think number one, diversifying in different products makes more sense. And also thinking about dynamic asset allocation funds is something what I would recommend.
Okay, let me go across to the next question coming in from Anand, age 32, says, I've invested 5,000 rupees a month each in the Tata Tourism Fund and Motilal Oswal Manufacturing Fund. Are these good bets? Thank you so much for your question, Anand. An interesting question there because both of them are thematic funds, very specific kind of investments. Rushabh, this is an area which has been very popular in the recent past. First of all, do you think a thematic fund is a good idea? And what about these 2 specific funds that Anand is asking about? That's the Tata Tourism Fund and the Motilal Oswal Manufacturing Fund.
Tamanna, we saw more than 66,000 crores of money coming in the NFO segment, especially sectorial and thematic funds. See, what happens is that, from a business point of view, AMCs are taking out or introducing new funds because the markets is good. We are sitting on plenty of liquidity. See, currently, let's look at the underlying facts of the markets as well. It's good to see the sentimental drive or the markets. We all want the markets to go ahead, but it's also at the same time very important to look at the facts and figures of the underlying market. See, currently markets are very expensive. Tourism sector and manufacturing sector are trading at a very high premium. Now, these two being sectorial / thematic products, will be very cyclical from time to time. They will perform in cycles. Okay, they are not going to perform in a straight linear direction. Okay, so if Anand is taking tactical bets, entering at lower valuations and then redeeming when the valuations become expensive, then from a tactical point of view, okay, you can take sectorial and thematic bets. But from an SIP point of view, I would still bet on diversified funds rather than thematic and sectorial funds.
All right. So be diversified rather than thematic from an SIP perspective. Santosh, your quick take on these two funds?
I think I'd go with what Rishabh said. I think Anand has just got carried away with the hot sectors in the economy right now, or the hot funds that are doing well. Though when you look at it from a layman's perspective, being in tourism, being in manufacturing, all seems to be striking off the right notes. But this is not good for long-term portfolio and wealth creation, especially if you're starting off an SIP. You're way better off in diversified funds and avoiding these kind of thematic and sectoral funds, because these themes and stories tend to unwind also as quickly as they run up.
That's an important thing. That may be from an SIP point of view, and depends on the rest of your portfolio as well, Anand. If this is all you've got, then maybe diversify. If this is something that you can bet on, then that's a different question. Tyagarajan writes in, age 61, says, started investing after the budget and have gains around 3% in PSU funds. Should I hold or sell? All right, Mr. Tyagarajan, thank you for writing in to us. He has started investing after the budget and in PSU funds, has already seen a gain of about 3%. Interesting question. Santosh, I'll let you field this first.
Well, it's interesting for this question to come up because it's just barely a few weeks since we had the budget, and to think that you want to decide to quit or to continue itself is just telling of the present market scenario. So my humble request to you is that, especially when you made an investment in a sectoral thematic idea like PSU, one would have to really give it a long runway. And considering that this is the first fund that you made investment, I'm given to understand that you must have at least thought about it before making that investment. Otherwise, thematic and sectoral, please give it sufficient time, at least a 3 to 5 year horizon, and don't worry about how the markets perform in the short term, like in weeks or months, or maybe even in 1 or 2 years, because markets can go either ways. The 3% positive can grow higher or even go lower, because one really cannot predict how markets function in this extremely short term. Please think long term. It's good that you've invested. Stay put and maybe stay for longer. Next time when you want to make an investment, avoid being in sectoral or this kind of thematic ideas. Be in a little more diversified instruments. Considering your age, I think you'll do better in well diversified multi-cap or flexi-cap.
We have very little time, so I'm going to take one last question very quickly. Jaipal, age 31, says, I want to invest 10,000 rupees in an SIP, each in 4 fund houses in multi-cap schemes and 1 ELSS fund for 10 years, planning to spend 50,000 rupees a month for 10 years to accumulate 1 crore. After that, I want to withdraw 1 lakh a month through SWP for 20 years. Is it a feasible goal? First of all, Jaipal, congratulations on having such a clear plan for the next decade or so. Rishabh, what do you think of the plan?
I think the plan is fantastic, Tamanna. Getting into multi-cap funds, which is a combination of large, mid, and small cap, and plus, of course, ELSS, which follows a flexi cap strategy, I think is a good bet. He's thinking about diversification also and not concentrating towards 1 or 2 products. So towards multi-cap funds and ELSS, I think it's good to go. Coming to his very specific goal of 50,000 rupees per month for 10 years, he will surely accumulate more than 1 crore of rupees. But coming to his SWP for the next 20 years, pulling out 1 lakh rupees is going to be a tough job. He will definitely run into negative balance probably in the mid of the journey. So I think he's able to pull out anywhere between 30 to 40,000 per month. If he wants to pull out around 1 lakh of rupees, then of course increasing the SIP amount from 50,000 to probably say 75,000 or 1 lakh rupees will make more sense.
Okay. All right. So that's the advice for you, and great that you are planning up ahead. That's all the time we have on the Mutual Fund Show today, but the numbers on your screen if you want to write into us. We'd love to hear from you. Tell us what you think of the show and what are the kind of topics that you want to see discussed as well. We're always listening. But for now, thank you so much, Rishabh. Thank you, Santosh, for joining us. That's all the time we have. But stay tuned for more to NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead?
Welcome, you're watching Earnings Edge. I'm Mahima Vachrajani. Well, before we we move on to the managements that we're going to speak to on this edition of Earnings Edge, let's take a quick check on what the markets are doing. Well, the markets have remained stable and steady for the day today after the Asian markets have recovered. In terms of the benchmark indices, Nifty 50 is up around 0.1%. Let's also take a quick look at Sensex. In fact, Nifty 50 has come off from its day's highs. It's now trading lower than it was in the start of the day. Sensex has also come off from its day's highs, trading around 0.1% higher, in line with the Nifty 50. Let's also take a quick look at what the broader markets are doing. The broader markets are doing a tad bit better than the benchmark indices. Of course, the mid cap 150 is up around 0.5%. Let's also pull up the small cap 250. It's up around 0.7%. Let's also take a quick look on the contributors of the Nifty. What's weighing up and weighing down the Nifty? There you go. There's RIL, LNT, HUL, HCL Tech, all weighing up the Nifty 50. And there's stocks like HDFC, Bharti Airtel, ICICI Bank, SBI, which are weighing down the Nifty. Let's also quickly pull up the breadth of the market before we move on to the management of PLS services. The breadth of the market has come down since the start of the show. At present, there are 1200 odd advances versus 800 odd declines. So where the ratio was 3:1, the ratio has now almost gone to 1.5 times. But let's move on and let's welcome aboard Shikhar Agarwal, Chairman at PLS E-Services and Joint Managing Director at PLS International. Welcome to the show, Shikhar. My first question to you is, great quarter for you overall for Q1 FY25. I want to understand as to, how the quarter has gone by as per your expectations, and what does FY25 look like to you?
Yes. So as you know, this quarter we did a revenue of 492 crores on a consolidated basis, which was a growth of around 30% compared to similar quarter last year. And if you see at an EBITDA and PAT level, we did an EBITDA of around 133 crores, which is a 70% increase. And even at a PAT level, we did a PAT of 120 crores, 70% increase compared to similar quarter last year. So definitely, the growth has been in line with our internal expectations. Our volume also grew 18% in terms of visa volumes. We did around 8.5 lakh applications compared to 7.2 lakh applications that we did in first quarter last year. Also, if you see our EBITDA margins, the percentage, now we stand at an EBITDA margin of 27% compared to 21% that we did in the last quarter, Q4 of last year. So definitely there has been growth on all fronts, all aspects. And this does not contain the numbers of the new acquisitions that we have just announced. That numbers will start coming in from the second quarter.
Got it. And Shikhar, can you help me break down segment-wise as to how your revenue has been and revenue has grown?
So yeah, if you see the segment-wise, visa outsourcing, the revenue now stands at 414 crores. In first quarter last year, it was 304 crores. So we grew 36%, in the visa business. The revenue in the e-service business is quite similar, but the EBITDA also in the e-service business has grown 30%, which is at 12 crores now compared to 9 crore earlier. The revenue, in fact, we had good growth coming in from BC and e-service, assisted e-service business in the e-governance digital business. That's why we've seen a 30% growth in EBITDA even in that business.
Got it. And Shikhar, the kind of growth that you've seen in this particular quarter, do you think that this will sustain overall in FY25 throughout?
Yeah, definitely the numbers that we've achieved in this first quarter, we did a 30% growth compared to first quarter last year. I think this is the new base, and we think that we can maintain that. Even that, iData acquisition, the numbers, iData did a top line of 300 crores and an EBITDA of 144 crore last calendar year. The numbers will start adding from the second quarter. In e-service also, we announced acquisition of RDFLS loan solution. Those numbers should also start adding. And we expect a few new contracts to start in the coming quarters, that we've already won. And we expect multiple tenders that we are bidding for. So all the numbers that we've achieved will be maintaining. And even at the EBITDA percentage level, the margins, we expect further improvement in the coming quarters.
Got it. And if you can help me quantify that margin improvement, please.
See, if we were at a 15-16% EBITDA margin level 2 years back, last year we reached a margin of 21%. There was a 6% increase, 650 basis point. And this year also, now we are at 27% in the first quarter EBITDA margin level. So definitely whatever has been achieved is the new base, and we wish to maintain that. And we are constantly thinking of ways to increase both the revenue and margins of the company. And I feel that there could be a further upside in the margin levels of the company.
Got it. And Shikhar, in March, like FY24 ending, March ending, you did a revenue of roughly 1,670 crores, right? And you've already done a revenue of 493 crores, which is more than 1/3 of your FY24 revenues. So if you can give a context as to where this number will be at the end of FY25 in terms of top line as well as bottom line.
See, if you see our 4-year trajectory at EBITDA level, we have done 92% CAGR growth. At 4 years, if you see the numbers, this quarter the revenue that we achieved is in fact, and the profitability is more than our full financial year FY21 numbers. So FY21 we did less revenue in the full financial year than we just did in this first quarter. So there has been a 30% increase in revenue compared to similar quarter last year and a 70% growth in EBITDA level. So definitely we want to maintain similar level of growth, and these acquisitions will be added further. There will be further tenders that we are bidding for, where we feel that we can win some market share. So we feel next few years, we want to maintain the trajectory of the growth.
Got it. And, from a viewer perspective, I want to understand that, you're transitioning from a partner-run model to a self-managed model. I want to get more perspective on this one thing. And overall, how will this impact your numbers?
See, when we started the company initially, because of operational reasons in certain geographies in Latin America, we were operating with certain local partners. So we, as the company grew in the last 2 quarters, we have transitioned to our 100% owned entities where 100% of the profit is going to be retained by us. In certain geographies like Middle East, in Saudi Arabia particularly, wherein there was a law where you had to operate with a local partner before, we transitioned and now are operating 100% owned entity. So definitely the 100% profit is being retained by us. So that was the business transformation that we did. And going forward also, there are still certain other countries that we've identified that we want to transition to our own model, wherein we will see an increase in profitability of those territories. Having said that, there are multiple business development opportunities. If you see, our visa volume has grown by 18%. This is partly due to the new contracts that we have deployed. Further increase in visa volumes is expected. So, we see increase in revenue per application from our existing contracts as well as increase in visa volumes. So that is why we see growth on all the fronts of the company.
Got it. And Shikhar, BLS e-Services is now a separate listed entity. I want to understand that what is the progress that we are seeing there, and what is the kind of revenue growth overall and bottom line growth that you're expecting from BLS e-Services?
BLS e-Services is performing phenomenally well. We grew 30%. Now we did an EBITDA of around 12 crores compared to similar quarter last year where we did an EBITDA of 9 crores. And we have also announced this acquisition, which is supposed to be completed shortly. So that company, does a revenue of around 500 crores and a bottom line of around 30 crores. So those numbers will also start getting added to our books, and we will use our 1 lakh touch points across India, to increase the profitability of BLS, that company. And if you see BLS e-Services, we did 20,000 crore worth of transactions in this quarter and 3.5 crore transactions. We've also added a lot of private sector banks. Last year, the full year we helped dispersion of 602 crores of loans. And first quarter itself, we have done 1,000 crore worth of assisted loans that we have dispersed. So we see major growth in BLS e-Services as well.
Got it. And Shikhar, for BLS International, I was going through your investor presentation, and as compared to FY22, your cash position has grown by 59%, and similarly, cash from operations has grown by 99%. And you're sitting at the end of FY24, you're sitting on a cash of roughly 1,100 crores. So I want to understand that how are you going to channelize the cash that you're already sitting on, because that's a huge amount.
Correct. So see, majority of the cash has been utilized now for the acquisition of iData. This other acquisition, Artifilis, will also entail the utilization of certain cash. So I think most of them will be utilized, already has been paid off. So now the cash position is obviously less, but in the next few quarters, next few years, we expect good amount of cash to be generated in the books. And we are constantly looking at more opportunities for deploying that cash for the best shareholder return, including constant dividend policy that we've been following, in further acquisitions, in deploying this cash in technology, deploying in increase in geographical presence across the world.
Got it. And any particular acquisitions that you're already in conversation with? One thing, and what areas will these acquisitions be on? Will it be on the side of BLS e-services, or will it be towards visa and consular services more? I mean, will it be digital or something else?
See, the reason why we listed BLS e-services was that we want to utilize the growth in each company, the cash profit generated in the growth of that particular company. We are looking at acquisitions in both these entities, both in BLS International, in related fields of visa outsourcing services, and in BLS e-services as well, assisted e-services, BC services, and e-governance as well. So we are constantly looking at different opportunities where we can generate good shareholder value, good return on our investment, and economies of scale can increase the profitability of those companies.
Right. And overall, you are one of the global players in this particular industry. I want to understand that what are the kind of tailwinds that you're observing in the industry overall in terms of, when it comes to visa distribution services and so on?
See, a tailwind in terms of travel, if you talk about, the number of planes being ordered by airlines, the airports being expanded, the whole infrastructure getting geared up for the future demand, more people are going to travel in the future. They've already started traveling, not only from India outbound, but globally as well. People will need more visas. Governments definitely need support of trusted partners like us to give more visas. So we feel that, in the next few years, the travel potential, the outbound tourism from India, the inbound tourism into India, because we also work with a lot of Indian embassies across the world, where foreigners coming into India have also started to increase a lot because of the development of different corridors within India. So we expect the tourism, numbers or visa outsourcing numbers to come to a different level. We will also focus at different kind of government service outsourcing, like citizen services, consular services outsourcing. More and more locals are moving abroad from across the world. So even consular services will be in high demand. So that is why we feel that in the next few years, we can reach new highs.
Got it. And Shikhar, any new geographies that you're exploring at present?
We recently, opened up new offices in Latin America and Colombia, Peru. So Latin America is definitely where we are expanding in. In Africa, we opened up offices in newer regions. China, we opened up offices in newer cities. So that is why we feel that in all these territories, Africa, China, Latin America, Europe, we see, and Southeast Asia as well, we see major growth coming in, and we are expanding our reach into newer countries and penetrating more in the existing countries that we are present.
Got it. Well, Shikhar, thank you so much for taking out time and speaking with us at NDTV Profit and giving us those insights on BLS International as well as BLS e-services. But with that, it's time to slip into a short break, but do stay tuned. We have lots more lined up on the other side.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's
Welcome back to Earnings Edge. I am Puneet Zaveri, and looking at the markets right now, we will be getting into a corporate conversation in just a bit. But before that, we see a host of numbers coming in from companies. Let's start with TVS Motors reporting bang in line of numbers. We have Imagica World as well that came out with numbers, and now for Imagica World, the margins have been decent, but profitability has been impacted. While we see Raymond also came out with its numbers just right now as well. While we look at how the market is also doing, it has been it's down today right now, just about 126 points. It started on a really high note, but let's get into our corporate conversation for this particular segment. We're talking with Ratan India Enterprises and discussing with them about Revolt Motors, which is one of the companies within the parameters, as well as other businesses. To discuss this more, we're now joined by Mr. Anjali Ratan Nashia, the chairperson and co-founder at Ratan India Enterprises. Ms. Nashia, thank you so much for joining us today. Let me start with Revolt Motors. Firstly, you are expanding your presence and now have 115 dealerships across the country, and it's a very interesting segment that you operate in, which is the EV bike segment. Talk to us about the rationale behind increasing the presence, and also about the new launch that you had at the start of the year, the RZ 400. Talk to us on how the product has been accepted, what is the kind of response that you've gotten, and a little bit on that.
Yeah, hi, good afternoon. Thanks for having me over here. And so regarding the expansion, we are expanding all over India. It's pan-India expansion. And we are seeing a very good interest in the market in terms of sales of EV bike in tier 1, tier 2 and all tier 3 cities. It's not just restricted to the metro cities. And we already have 125 dealerships, and we are by the end of the year we are planning to have close to almost 200 dealerships. And regarding the penetration of EV bike per se, we have our company is one of the best EV bike company in India. We capture almost like 95% of the sales of electric bikes of India. We launched, we did launch another model, which is RV 400 Breeze recently, but we'll be launching many more products in the coming time. And regarding the service, the growth, see, it's just not important to have a dealership. It's very important to giving good service in the market. So we are expanding with a lot of workshops and service centers all across India.
Just wanted to get into the EV bike segment for a moment, because you did mention that you have 90% of the market share, and we haven't seen much competition over the last couple of years, but we are seeing a lot of companies now coming out with plans for making EV bikes. Specifically, just wanted to understand a little bit on the market, because we have seen the EV scooter market being very strong. We had roughly 9 to 9.5 lakhs EV scooters sold last year. The top 3-4 companies also present across the petrol and diesel have also launched EV scooters, but no such plans from them as of now for launching EV bikes. The share of EV bikes is currently very low when you see in the two-wheeler EV landscape. How do you see this evolving in this particular, maybe the next 12 to 18 months, and what kind of buyers do you see? Because we see a very premium type of buyer coming in for the EV bikes, while for EV scooters, it's a different type of market where it's become mass segment now. Talk to us what you're seeing on this particular side.
That's absolutely right. There are many scooter players in the market, but if you see the market, we have 2/3 of bikes selling in India as compared to scooters. So it's almost like 65 to 70% of the market in India is for bikes, and the rest is for scooters. So where is the bigger game? The bigger game is in the bikes, but why the scooters are more right now? I mean, it's in terms of technology, in terms of EV expansion, right now it's scooters. It's the R&D, the entire ecosystem. It's easy to get a scooter up in the market, but when I talk about the research or getting a robust EV bike in the market, it takes many years. So, like, our company is almost 7 years old company, and our bikes have covered almost like 40 crores of kilometers on the road. So getting a robust, high quality, good range bike is not so easy as compared to scooters. And when I talk about the R&D, bike is associated with good range, a robust product when it comes to quality. So bikes you will see mostly on the highways and by the commuters. So it is very, very important that the balancing, the quality of the bike is really, really good when it comes to good speed. So in the bike, most of the parts are exposed, where in scooter, it's more like a box. When you're doing any sort of a changes in terms of scooter, it's much easy. When you're changing the parts, or you're tweaking with the scooter or getting a new product.
Right.
But with the bike, it's more the whole bike is mostly exposed parts. That's how people like the bike to be, and it has a bigger wheel. So when you have a bigger wheel in the bike, it takes a lot of time to do the to get the product in the market. It's not like many companies are talking about getting the product in the market by 26 or 27. And I'm sure in coming 2-3 years, there'll be many more.
I just wanted to address this particular competition, which you're also raising, that we are seeing, maybe only after a couple of years there'll be, but we have another, IPO on the bourses, which is of Ola. Now, they're also planning to compete in this particular segment by next year and have planned roughly 3 to 4 launches. I want to understand what's the current strategy to play versus, because you've not seen any kind of competitor in the EV bike segment over the last few years, ever since you acquired Revolt. How are you dealing with this? And also, if you could tell us what's the current capacity for EV bikes for your company and what's the utilization?
So when you talk about the competition, I got to know there are some of the competitions, like you talked about Ola coming next year with their range. Though they're coming with a range which is close to what I heard earlier, I'm not too sure, it's more than 2.5 lakh rupees. And there are 1 or 2 players in the market as well. So I wouldn't say they are my competition, since their pricing of the bike is close to like 4 lakh or 5 lakh in the market, wherein I am close to the commuter. So I'll be launching a commuter bike as well. I'll come on the dates on that later. But our bike is close to right now almost to 1,20,000 or 30,000. So in that range, there is nobody, and our commuters in India would expect something close to 1 lakh rupees when it comes to bigger number on the sale numbers. Yeah.
If you could just give us the current capacity of the EV bikes, how many can you produce, and what's the utilization at the moment?
So we are, I'll get on the exact numbers in our result, but we have a capacity of close to 14,000 bikes a month in our present manufacturing unit. And we have a manufacturing unit in Manesa, that's very close to Delhi.
Now we would love to talk about the other businesses as well of Ratan India, but maybe we'll have a larger chat post our Q1 results. But thank you so much for joining us today and talking about Revolt EV and as well as the competitive landscape. But thank you so much for joining us today.
Thank you.
With that, it's a wrap on this edition of Earnings Edge. Stay tuned to NDTV Profit for more.
whole day passes like a blur. The news just whizzes past. And you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.